Morning all. Morning. How are you all doing? Sorry I'm late. 53, look. 3 minutes late. Not good. I was sitting here setting up some trades and I was engrossed. Just trying to figure out all these yens, basically. We've got really good pullback opportunities in all these yens, looking at the hourly charts. I was just trying to decide if I want to short these yens today. Because we've got these propulsion. There's two things I can see happening today. Either we're going to, because this, if you look at all these yens, sorry, morning everybody. Let me just waffle on about what I was talking about before the market opens. But this is one massive propulsion gap as far as I'm concerned from this this move from Wednesday. So any point in here, we could see rejection start to come in and more yen strength start to flow. But there's still a lot of uncertainty with these banks. So I'm trying to decide whether or not I want to start building a position right here, because we seem to be rejecting, or whether to wait and get up to the origin of the move, which is pretty much ADR today on pound yen, for example, and start shorting up there. And I was been placing like lots of little potential orders in and calculating things and trying to figure out what to do, but I still can't make my mind up what to do with these yens. But these, this euro yen, for example, or with what we had yesterday with the euro, you'd expect a decent move off of this. We didn't get it. So there's obviously still an awful lot of money coming into the yen. And we are so far away from filling on some of these. So I'm really undecided. Every bean in my body wants to short it, but I can't figure it out. So I'm still contemplating. Anyway, morning great filibuster. Get the likes up. Come on, let's hit that like button. 14 likes, 41 people. We're short. Morning Stevie, morning Jacob, morning John, morning Dwee, morning Diamond, morning Anna, morning It's Time, morning Michael, morning David. Happy Friday. God, my throat. Too much streaming. Morning, Gable. Right. So, light news day today. We've got University of Michigan this afternoon at 2 o'clock. Not a lot. University of Michigan doesn't really do much. Sometimes it does, actually. That's a lie. But it's one I just can't believe they pay any attention to, but they do. 500 consumers get a little survey and they mark it as a red news event. And it's always baffled me why they pay so much attention to it, but they do. So, yeah. Anyway, so that's this afternoon. Apart from that, we've got no news. Overnight news, there wasn't a massive amount. We had Kuroda speaking. So why can't I go back and just refresh the feed? Where are we? Yeah, so this was sort of late last night. So JP Morgan, Citi and everyone. So basically they're bailing First Republic out, which is fine. So that's a third bailout now. There isn't much information that I could see about any other banks at the moment. So I think we might come out of an extreme fear scenario today, but we will see. Fed balance sheet jumped. Federal Reserve has barred the mention of regulatory flaws in the Silicon Valley Bank. Goldman believes the ECB remains in tightening mode. Yeah, that's fine. That's what I believe as well. Expects the interest rate rise by 25 basis points in May versus the prior 50. So a slowing and pushing the terminal rate to 3.75. So this is what I said yesterday, if you remember. We're up to 3.5 now. I'm quite surprised 3.75 being the terminal rate when you look at everybody else. Yeah, apart from Australia, we're way above, and we are forecasting hikes as well. So if they're going to terminate at that with the second highest inflation in the world, unless that figure comes down dramatically to a like 0.4 or something, and that stays stable, considering it is the highest unemployment in the world, and massively affects that and that, I can't see that being the terminal rate. I don't understand how the maths works. You can't. So something else is going on, or I don't know. But Goldman have come out and said that they reckon 3.75 is going to be the terminal as well. So we'll see. But anyway, so that came out overnight. Z arrived in Russia. Hopefully he gets back out again. And we got Vilroy. Inflation in the Eurozone should be at least 3% by the end of the year. Again, how? Wrong one. How is that getting down to 3%? You reckon you're going to knock 5.5% off of that in the next sort of 8 months, considering it's going down at 0.1% at the moment? Just nothing. I don't know where they're getting all their information from and why they think this is going to happen, but I don't know. We will see. We will see. Anyway, so that's overnight news, and obviously no news today. Buyer scorecard has shifted quite a bit. New COT report came out yesterday, so I've updated everything on the site with the new COT report. So COT has changed quite a bit. You can see we've got quite a lot of 2s, 1s and 3s in there, -1s. Yeah, this was all 4s or 0s. So there's been quite a shift in COT. So if we look at the combined intraday, we've got 1 minute to the open. There we go. Ooh, hello. Woof, woof. Anybody get on that? Jesus, that was quick. That's your pre-market 15. We came out of that really fast. Now we're going back up really fast. Cool, this is volatile this morning. Look, Jesus, look at this. Okay, you're long on the pre-market. Wow. Stopped out on mine. I went short on it. Pre-market. Just a speculative short to see if we could get a run. We didn't. Okay. I did a bit of scalping yesterday to try and get that account up, and I blew. So I'm getting to the point where I can't trade this anymore. I can't trade this account. I can't get any size on. I can see how these guys are making their money now. I can't even take a 1% risk on the DAX. I haven't got enough margin to take a 1% risk on the DAX. It's absolutely pointless, this account. I'm just getting to the point where I can't bother with it anymore. So the fivers, yeah, looks good on paper. Absolutely impossible to trade. So yeah, lovely breakout the highs there. I don't think, is anybody trading the pre-market 15 at the moment? I don't think you would have got that on. That moved way too fast. I don't think the limits would have triggered on that. But if you got that one, if you managed to get that on, I would imagine you got slipped on it if you got it on. But if you did get it on, that is a target hit, 1.5 R. Well, with 22, whoops. So you're looking for 33, you got 45. So that was a target hit this morning to the upside, but you would have stopped out on the short. So if you got it on, but that was fast, wasn't it? So there's your 5-minute opening range. Good luck with that this morning. It's going to be a toughie, isn't it? Wow. Okay. What was I talking about? Sorry, yeah, COT and everything. So yes, there's been a lot of change in the COT report. So the yen, they've scaled massively into the yen. Obviously, all of this information is from the 28th of February. So we're still two and a bit weeks behind. This is before the SVB debacle. So I don't think this will actually change anyway, because what happens with a safe haven will unhappen. Yeah, if you get what I mean. So, we pump money into the safe haven, and when everything's, it's like getting down below the trench, and as soon as it's all over, you can go out again. It doesn't affect the long-term bias. So I think, reading into that, they're not happy with the current situation with the yen, so they are shorting it. The reason the COT report has changed quite a lot is because a lot of these are now switching back to sort of medium strength on the longs and shorts. So we're back down below the 60s, yeah, on a lot of these things, and getting close to 60 on a lot. Yeah. So what that's done is it's slightly weakened the bias for a lot of things. So when you look at the longs and shorts now, there's a lot less of them. So what we're finding is currencies are coming more into line with each other, which means we're going to have less strength in direction, if that is correct. And obviously we need to see what in the next week comes out at later today. But what I think it means is we're going to be paying a lot more attention to retail sentiment to drive the strength of the buys and the sells. So we'll see, but that's basically narrowed right down. A lot of the figures are coming out obviously fairly flat as well now with fundamentals. We're all catching up with each other, aren't we? Yeah. Things are all starting to get to terminal rates, and it becomes a lot more difficult to figure out what the hell is going on with everybody. Did anybody take gold, by the way? And that euro is really pumped today, hasn't it? Gold? Did I say gold? I meant oil. If I didn't say oil, I meant oil. I got back on oil yesterday. We're definitely long on that. So yeah, I got back on oil yesterday. Where did I get in? I got in at 68,365. Oops, we were looking at this 68.36. So I got in there, basically on a break of that high, pretty much. So I'm long oil. Target 1 is there. Target 2 is just a runner. So we were looking at that coming out of here, weren't we? We looked at the reversal. We had a reversal out there. We had a reversal out there. It's absolutely beautiful out of support. So that was great. Okay, so there's your 5-minute opening range. We'll have a look at this DAX in a second. Just catch up on the chat. Morning, Gable. Morning, Paul. Morning, Anna. Morning, Luke. Morning, Elliot. Celso. Morning, Jonathan. Core CPI Euro at 10 a.m. Yeah, don't pay too much attention to the core CPI for the Eurozone. This is really pumping today. Can I buy it? Yes, I can. Oh, not with a 200-point stop. Oh my God. That's too tight. 3,000. Let's go more with 4,000, shall we? Didn't get any size on that. So going with a buy stop there, which is basically a 5-minute opening range break I'm going to take pretty much. I'm going long. Let's see if it wants to rally today. Yeah, don't pay too much attention to that one this morning. It's yellow for a reason. So the whole Eurozone's inflation isn't really that impacted. Where are we? Friday. The whole Eurozone inflation, it's a little bit like the stock market, yeah? So when you get something like the Dow with 30 stocks in it, yeah, how well they all do as a whole isn't actually as relevant as one or two of them. So the vast majority of the CPI for the Eurozone is made up by the Germans and the French, yeah, which is why we get separate reporting on the French and the German, because this makes up more than 50% of the inflation figures for the currency. So that CPI is less impactive and less important, which is why it's yellow news. We kind of know what they're going to be because we've already had the CPI for the others reported, which is why that's the final. So it you know, you can get a surprise out of it because there's obviously a lot of other countries in there, but they don't tend to really do anything. So don't pay too much attention to that one this morning. So we're just stalling out at the highs there. Morning, Fignalia, Jonathan, Philip, Neo, Astro. God, can you imagine if we get 200 or 300 people in here? It's going to take me about half an hour to say good morning to everybody. Doran, buy UJ, 132.99. Are you position trading it? Fair enough. It is structure is potentially breaking long on it. Nice targets to the upside. This is what I was looking at this morning. I can't make my mind up on these yens at all. They are massively, massively bearish. Obviously, everything is bearish. Everything is a sell against the yen at the moment, based on fundamentals. We just had notification that the terminal rate hasn't been reached on the euro. But yeah, I don't... I can't make my mind up whether we're going to get these propulsion gap fills or whether they are just going to drive more safe haven money in. And if they do, obviously it's a massive short. Could go either way. Very difficult to tell at the moment. Morning, Andres. Doran took a sell on gold. Cool. Think you're right with oil. Got stopped out twice, but think it's good now, especially after the week we've had. Yeah, hopefully. I'm $400 up on it at the minute. Target is 75.40. Thanks for the follow, Al Haji. Welcome aboard. Just turn my volume up so I can hear stuff. I had 2 people tipping me this week. Bought me a pint. And I didn't hear them because I had my volume off, which was really rude. So making sure I turn my volume up. So yeah, I'm target one is 75.40, which is there basically. So just below this propulsion gap is my initial target, which is below this low. So obviously if we're going to react at that and not get into propulsion and they start selling out of propulsion, I don't want my target there. I want my target below that. And then obviously I'm just got a runner on. So, okay, we're rejecting 5-minute highs. This is great, isn't it? This Fivers account is actually doomed. I'm pretty sure this is just doomed, this account. I have been trading this for how long now? When did I start this account? 16th of March? No, that's history. 17th of March. 7th of March, yeah? Over a week. I've basically gone up to 800, down to 800, up to 800, down to, you know, that's literally all I'm doing. Because every time I get a position that I can actually get money out of and I get into profit, I can't add any money on. I can't push my winners. This is the problem with these Fiverr accounts. You cannot leverage them. You've got a 1 to 10 and you can't trade a 1 to 10. If this goes long now, right, and I manage to get 1% on, if this pulls back and pushes, I want to break that high and add another 1% on. I can't push a winner. If you can't push a winner, you can't, it's useless for scalping. Swing, it's all right. You could get, 5 or 10 swing positions on, but I can't be bothered. So it's a swing account, basically, the Fivers, if you want to trade it. So yeah, oil is stalling at the minute, but we will see. Saya, Emmanuel. Morning, peasant. Coco, going to enter oil if the 1 hour chart closes at 69.550. So you're taking a breakout, yeah? That'll do. Take breakout yesterday's high. Little scalp up to there, stop under the low there. 1 to 1, that will do you nicely. 5-minute breakout is on. The current spike on the DAX 5 minutes, is that their market has just opened? Yes. So this is the Frankfurt market opens at 8 a.m. UK time, which is this, obviously you can see. It doesn't take a rocket scientist. If ever you want to know when a market opens, indices wise, if you go to your properties, turn on volume, yeah, you can see it's absolute, an idiot can see when the market opens, yeah. Look at the volume spike. Volume spike. It's a little bit difficult when the market's going completely crazy, but you can see there's the volume spike. Yeah. But it's 8 a.m. And obviously your broker will have a different time depending on what they decide to do with their times. But yeah. So the pre-market, is anybody trading the pre-market with the opening range break? I'm interested. I'm not trading the pre-market at the moment, and I'm interested to know if that triggered that short. because when we watched that happened so fast. I don't think the EA would have had time to get that on. I'm not even sure. I mean, that would have triggered definitely. So the pending would have been there, but I don't know. I think you probably would have got slipped on that order as well. That was such a volatile open this morning. Huge amount. Yes, you traded the pre-market. Did you get it on whip and post that short? Did it trigger that short, or did it trigger after? Actually, yeah, no, it would have. Even if it didn't get it on the first time, it would have placed it as a limit and triggered it on the way back, wouldn't it? It didn't. It didn't trigger both. Oh, right. Okay. Weird. Anyway, rejecting the highs. A minute. Open manually. Only got one position on the short, not two like normal. Oh, okay. Triggered on the way back. Yeah, we'll do. Okay. Right. We don't trade mitigations in here, by the way, Doran. You're an ICT trader. If you want to do ICT trading, there's probably lots of ICT traders out there that stream. Sorry, I mean, I trade the 7 a.m. PM ORB. 7 a.m. PM ORB. You still have the 6:55 5-minute candle. Oh, okay. So you're just trading the 5-minute pre-market open. It's today. That is the 5-minute. The 5-minute and the 15 today is actually the same thing anyway, isn't it? So interesting. Right. So rejecting those highs. So quickly, this is a massively volatile. We're going to get a trend day today. Yeah, I can tell by the way this is going. It looks like a trend day today. The question is trending high or trending low. So let's just do a quick analysis on the DAX before we have a look at everything else. So upside targets on the DAX, we're running into resistance at the moment, which you can see on the chart here, which is there. So we're running into this resistance zone here, which looks like we're finding a few sellers. Next stop is Tuesday's high, which is obviously that support term resistance. So that's a strong area as well, which is 152 to 50 area, roughly, somewhere around there. Down to 50. Oh. All right. Okay. Yeah. Something like that. So this area here basically is this area here. Yeah. So first resistance, we are kind of in that area now. Second resistance is there. So if we do get a break to the upside today, that's where we're headed. Then we've got obviously this massive propulsion. So there's a potential for an ADR hit and obviously out the highs. So this could be them undoing the entire bank debacle, basically, which is fine if they do. However, we are obviously in a big downtrend. So there's a lot of potential for new downward legs to start as well. So there's one or two things playing out. We're either coming up and we're just rejecting these highs. We're finding sellers at these areas basically to add on to their short positions, which they're already in. So obviously what the sellers have been doing is driving market down, pulling back, adding, pulling back, adding, pulling back, adding. So that's where the market structure goes short. If not, obviously we're driving out and we're going to run over the sellers, or this is a profit take move on their move. And obviously bear in mind it's Friday. This is where we take our profit. Or where they usually take their profits. So run to the highs would be very, very logical today as well. In which case there's ever opportunity to get an ADR hit in this morning. So a nice little trend day, just pushing up as it looks like we are doing at the moment. So target 153, 152.5 rather, something like that. So yeah, so that's the DAX. Obviously, the US indices yesterday, we had a little bull run. US indices are now bullish at the moment. Very, very mixed on the Dow though. So the Dow, when we're looking at the Dow and all the indices, we tend to find them all moving in sync. So the Dow, the S&P, and the Nasdaq. The Dow is quite divergent at the moment with the others. Not really managing to get back up into this propulsion gap. I'm pretty convinced we're going to get this one sorted. Not so convinced that we're going to get that one. So we've got obviously this downside target to hit, that one up there to hit as well. So there's two areas basically that we're heading for. Looking at the Nasdaq, we've just broken that high. We've filled that propulsion gap. We're testing this one. This could go anywhere today, couldn't it? Obviously. So, but we are massively, massively range bound still on it. So we're still not getting that new leg in to the downside. And until we break these highs and we're coming up to potentially challenge them today, that's ADR. So ADR today, we get an ADR today. That's a re-challenge of these highs. That puts us firmly in bull market territory, doesn't it? So there is a potential for a bull market run on this today. So we will see. So yeah, one of those two things is going to happen. S&P has got a lot further to go. We need at least a 250 ADR move to get the highs challenged on the S&P. So all the indices are really out of whack at the moment. Partly because I think this week, obviously, different indexes have got different amounts of banking sector and financial sector in, whereas obviously the Nasdaq, very little. So the Nasdaq's having a completely different week to everything else at the moment. So out of sync everywhere. And obviously the DAX has been the big rallier along with the FTSE, and that is now starting to pull down, although we got some really nice wicks to the downside and a decent rejection off of that high. So we've got a nice support potentially forming. Not really looking very bullish today, are we? Where is he? Let's find him. Here he comes. Mr. Wick has entered the building. Very wicky. Am I in this? Yeah. No, didn't get triggered. See, I can't even get a bloody trade on. What is the point in this account? What is the point? I can't get a 1% long on. The only way I'm going to get 1% risk on is if I use a huge stop. Like I need a stop that big. It's just pointless. Yeah, lots of rejection at this level, so be careful if you are long. I would reduce risk potentially. We are finding a lot of buyers getting run over up here. They are trying very hard though, so we'll see. So yeah, tricky indices at the moment. Just catch up on the chat. I have to catch up on the chat because if I don't, everything that is in the chat is completely irrelevant because it's so old. What minimum leverage is required for Forex? It depends on how you're trading it. If you're going to position trade, as I teach in the bootcamp on the website, you're going to need something in the region of 200 to 500. Normal trading, 1 to 30 is fine. 1 to 10 is just pointless. Don't bother with it. But you won't get 1 to 10 anywhere. The minimum broker will give you is 1 to 30, 1 to 100 with most. Morning, Amadeus. Which broker is that? Your D40 cash? It's Forex. This is my Forex is my normal broker. At the moment, I switch brokers. Took a nice short on sterling today. Cool. Right, okay, up to date on the chat. That's good. Can we have some more thumbs up, please? 87 people in here, 37 thumbs up. Keep going. DAX is just challenging those highs. Can I get, look. Can't trade. Oh, thank you. I'm on. What's my leverage? Oh, no margin. That's it. That is it. I can take one trade with a 60 pip, a 60-point stop, which is going to make me a couple of $100. It's too hard. It's just too hard. So I'm going long on the DAX, basically. They're going to pull back into this propulsion gap at some point, but hopefully they'll just run for it and come back and do this at a later stage. So we'll see. They may well come back straight into this. I've got a feeling, though, this might be a little fruitless this morning. Obviously, we know Mr. Wick is in the building this morning. There's a lot of sellers coming in at this level. This is the level I looked at, obviously, here. So we are finding a lot of sellers coming in at this resistance. However, we are holding up pretty well. So it's tough one, whether we're going to do that or we're just going to rally and then accumulate and break, and we just do flag breaks. So if we're going to trend, what you tend to get is push, flag, push, flag, push. Yeah, that's a strong trend. Weak trend would be more market structure, pull back into propulsion, break, pull back into propulsion, break. So if we're going to get a trend day to day, and we are going to come up and get an ADR, fill this propulsion gap, that's what that's the sort of market structure I would expect. So you need a fairly decent stop so that you don't get stopped out all the way on the way. But you can obviously just take profit, wait for the next pullback, get in. Either or. Right, ADRs. Aussie dollar CAD at the moment. I've missed it. Got to be quick this morning, isn't you? Aussie dollar CAD, reverse alert's just gone in, retest. We've just had the retest candle. That is your retest candle. So actually it's the same place as the retest now. So there's your M pattern. ADR hit. Really nice support area as well, look. So, resistance rather. So where we are at the minute, we've got this propulsion gap. It's not the best in the world, that, because we didn't break that low. That's the better one. But if you class that as a zone, really, and put those two together, obviously we've come back, retested, sellers have added, come back up, pull back. Now we've got market structure going long. Retesting that area, we're going to find some limit orders triggering there, though it does seem to have already come off. So you could take it now and take a second entry at 125 and then get out. But if you don't get in now, obviously, and it does drop, you've missed it. There's no real targets to the downside to aim for. Everything's tested, so it's all looks good. What's the bias on it? Aussie dollar CAD is a buy. So there's no cop bias on it at the moment. They're short on both. Retail are ever so slightly long, so we want to be shorting it from a retail are short, so we want to be longing it from a retail perspective, and everything else is mixed. So that's a tricky one, isn't it? Really nice level here as well on M15. I prefer that, much prefer that. So ideal entry for me today on that would be 125 ADR. I think you'll have a really good trade out of that. But obviously we've had the reverse alert now on M15. We've had the M5 reversal alert as well. So the market structure has shifted. Look. Yesterday's high is going to be your initial sticking point for a potential bounce. Other than that, I would say you're probably going to come down and test this area here. These lows is where the liquidity is going to be sitting, which is going to be 125. Hourly RSI extension. Yeah, it looks perfect for a short, doesn't it? But look at it, it's tight as anything, this one. So position trading, entry 1, entry 2. And then you should probably be able to get out on that, I reckon. Failing that, obviously. If that level does fail, that won't fail. That definitely won't fail. Look at that. Support, 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 resistance, resistance, resistance. And if that does break, you're going to go up and come back and retest it as support. So in, out. Easy. Aussie dollar CAD. New Zealand dollar Swiss is the other one. Where are we? CAD. Sorry, New Zealand dollar CAD is your other ADR. Again, same story. We almost got 125 ADR, so we pushed up. There's your reversal and retest. So at the moment, it's pushing back up. So right now, because you've had your reversal and your retest, pending orders under that low. So if this reversal alert is going to hold, and we are going to go with this bearish market structure from here, if you put a pending order under that low, there's your entry. Because if it does break that double bottom, it's it's going to come down through it. So target wise, nothing much to target down the downside on that one either. Resistance wise, very nice area. Perfect. It's good for a short, definitely. If it breaks that, obviously we'll come back and retest it. So if it breaks that area, excuse me, we're coming up into the propulsion gap, right? Okay, so scrap that. The fact that we're so close to this, I would say it's likely we're going to push up into this area here. Excuse me. And reject out of this somewhere. So it could well come off of this level. But with the fact that we're so close to this, I just get the feeling they'll want to come back up and retest this area. So this is sort of balance. We're in a price discovery push at the moment, which will probably pull back and long. So there is a very good chance that you'll get that pullback on this move, but then come and test this area. And we'll either do that. So the price discovery back up here will fail and they'll drive it back down again, or it'll work and obviously we'll come back up and test that high. So this is a tricky one. If that doesn't work, obviously it's really simple to scale in. You just wait half an ADR and you'll be in 3 positions. If it comes back to origin, you're going to find some resistance. You're already extended on the hourly. If we get up to there, you're going to be massively extended on the hourly, and then you're going to get an A-shaped recovery or at least a profit take move forming on that, aren't you? So I like it from here, but I prefer it from here. So they're both good ADRs, but you may have to take multiples on them. Your choice. Evening all, George. It is morning. Obviously you are you're upside down, aren't you? You're in the upside down part of the world. Sydney, been there, love Sydney. I've walked over Sydney Harbour Bridge. That was brilliant. Gold. Have a quick look at gold. I don't trade gold. We've got a few RSIs to look at this morning as well. So gold is a tricky one at the moment. I would say it's a short. However, it's a short until one of the banks falls over. If the banks fall over, it's a long. If the banks don't fall over, it's a short. US dollar has got another interest rate rise coming next week. The market has already factored in the interest rate rise. So we should see a medium to strong US dollar over the next week. Next week, I get the feeling this might be the end of the US dollar strength. I think we might start to see a little bit of weakness creeping in on the US now, because I think we're at terminal rate on the US dollar. So, so obviously we've come back up. We're retesting propulsion. We've got another little bit up there, but that, you know, that is the origin of the move. I think it could probably get there. If we were to get an ADR today, or, you know, if we got 150 ADR, for example, that would be beautiful short. University of Michigan this afternoon, we might get enough movement off of that to take it up there, in which case you want to get in short. But right now it's very difficult, because it all depends on what goes on with these banks, doesn't it? If another bank suddenly comes out and says help, we're going to get more of a flurry into safe havens, and gold is one of the places, as you can see, we go when there's trouble. So your news is what's driving this at the moment, and whether or not we get more bad news and whether we get bailed out, you know, that's what's driving everything. So right now, from a technical perspective, it's a nice looking short. We're just about extended on the hourly, but obviously there is a little bit more room for maneuver on it. But gold is US dollar is strong, not as strong as it was. If you look at the COT report, it is they are waning. This was up in the 70s. Then we dropped down to 68. Now we're down to 65. But we are still long. Yeah, the market is still long. The market is also long gold futures-wise, which obviously contradicts itself because gold is a cross with the US dollar. So you're basically trading a long against a long, aren't you, when you think about it? Yeah, futures market is long on gold. Futures market is long on US. There's no bias. So we got all these massive targets down here, but this was formed by obviously news, and news propulsion gaps quite often will get left behind. So this is FOMC. This was the unemployment figures. Now we've got the unemployment figures driving it back the other way. So at some point we're coming back down here. It's a question of, are we going to test this high, or are we going to hold bearish market structure and do that? Don't know. But at the moment, this is what we'll decide. Yeah, we get one more bank coming out saying, sorry, I've got a problem, and this thing's going through the roof. And all the indices are going to collapse again. So, don't know. Honest answer, not a clue. But whatever you do, position trade it, scale in. So if you go short, yeah, and it doesn't work out, add another short there. If that doesn't work out, when they take that, they're going to be limit orders triggering there. So take another short there. And then when they take profit on it, because they're so extended on the RSI, they need to take profit on the move, get out. If you don't know how to do it, it's all covered in the Position Trading Bootcamp, which is free. Hey, look, 10 hours of free education teaching you how to trade. How good's that? Does the below make sense for ORB settings? Assume UK time. 10 to 10:05, 10 to 10:10, 10 to 10:15. Yeah, so if you trade on the opening range breakout EA, that will be fine. So that will be the 5, 10, 15-minute opening range. But it's nothing to do with UK time, Mumo. The time you need to set in the ORB EA is your broker. Yeah? What time is it? Look, draw a little line. This is how you tell. Draw a little line on that candle. What time does it say down there? That's the time you use. It's your broker time. Whether it's 10 o'clock, 9 o'clock, 8 o'clock in the UK, when Frankfurt opens, has got nothing to do with anything. Your broker could say it's 4 o'clock in the afternoon. You use your broker time. The market opens at 8 a.m. Frankfurt. Robo Forex are UTC +2, which means we are 10. But your broker may not be UTC +2. They might be something different. But the way to do this is to go into this. I keep saying, go into the strategy tester. Put the EA in the strategy tester. Set the settings. And watch it in visual mode. Run. I've got optimization turned on. Watch it in visual mode. Run. This is not the opening range breakout EA. So forget what you're seeing. And verify it's doing what you want it to do. Yeah. So that's what you do. But just check here. This will tell you. So it's obvious, you know, if you go back and scan through your charts, it's obvious when the market opens. As I said, you get the volume spike, you get a big candle normally. This is your initial opening balance. Does that stop me out? No. Not far off. There you go. So there's the propulsion back gap test. So we've tested propulsion. The buyers have gone, nope, we're long. So now if we break that high, I think we are off on a trend day today. So target to the upside, as I said, 150, 250 initially, and then ADR. If we get it, obviously. Got to break that high yet. So if you're like me, you're thinking, yeah, looks like we might be on a trend today. This is where you want to be buying. Stop below that propulsion, because if that level breaks, we've invalidated the idea. Jacob, sorry, Mumo. No, where am I? Sorry, hang on. Lee, how you got my name? I like your name. My best friend at school was called Elliot as well. Lee Elliot, good one. GU, just for that, I will do GU for you. Hourly RSI extension to the upside. This is a sell. Whoops, where's my bias gone? So GU, well, it was a sell. It's range bound now, look. this is range bound at the moment only because sentiment at the moment is short. So retail sentiment, retail crowd are all shorting it at the moment, which gives us an indication that the market might want to try and go long because the liquidity is at the highs. So obviously in Asia, that's exactly what it's done. So at the moment, they are enticing shorts in London. Liquidity will be sitting there on everybody that's shorting the market at the moment. There's a reversal alert short. Yeah, so everybody that trades market structure is also short, meaning that their liquidity is also sitting at those highs. So from a long-term perspective, though, this is a short. The pound is a short. The US dollar is a long. If you look at COT, 58% of the market is short. 65% of the market is long. So again, looking at the buyer scorecard, like I said, we were a -4 on the COT report. We're now a -3. So the futures market is scaling slightly out of their positions. So it's slightly less of a short than it was before. And that's because I think the market is thinking, right, we're getting to terminal rate on the US dollar now. So this area up here, so if you were to imagine retail crowd all shorting at the moment, if the market needs liquidity, it's going to go there and it's going to find it. There's also going to be liquidity sitting up at these highs. So for me, I would be saying, right, if we can crack that level here, that's where I would see a perfect short entry. You've got RSI already just extended. So you can get in now and the structure could be that coming back down to test this propulsion gap. The structure could also be that coming up into this high. Yeah, so one of those two scenarios is going to play out. But overall, fundamentals are telling you to go short, but retail is also short, so there is a possibility of a long. So right now, it's a tricky one to sort of pick apart. But if you get, like with anything, if you're going to trade it, I would position trade it. If you're going to position trade it, get in. We've just had the reversal alert, haven't we, on the 5 minute? Yeah, so we just had the reversal alert on the 5 minute short. 15. We are just about to get it in the next 5 minutes. So if this remains bearish, this candle, we're going to get a reversal alert on the 15 minute. So potentially you could get that movement. You've got a propulsion gap target down there. That could well get filled. This is ADR and yesterday's low. So there's a good reason to come down there. We're running into this area of balance, price discovery, possibly going into another area of balance, or we are going to reject and come down. Then we're going to try price discovery down below that level. So I'm all short on it. So I like it short now. However, if that doesn't work, half an ADR is 64 pips, which is, funnily enough, resistance. And then another 64 pips is, funnily enough, the next resistance. Yeah. So half an ADR, get in there. If that doesn't work, get in again there. If that doesn't work, get in again there. If that doesn't work, then there's something wrong with the US dollar. But yeah. There you go. That was my analysis of the pound US dollar, which we will probably cover again in a minute because I will have forgotten about that, and I'll do it again when I do the RSIs. DAX is a little bit stuck at the moment. Morning, Baggy. Just wanted to say a big thanks for all your live videos and your indicators useful. Excellent. Good. Glad to be useful. Mumo, is it normal for H1M5 to go for 2 days without taking a trade? Well, yeah. Has H1 hit RSI extreme? H1M5, where are we? H1M5 is there. Oh, no, it's not. It's that one. So H1M5. Oh, really must order these. Oh, let's just try and find Aussie. There we are. So no, oscillators. Come on. Been doing this long enough. You should know what it is. I'm not using that color. So H1M5 basically, on the hourly chart, the RSI has to be above whatever you've set it to, yeah? So RSI on the hourly here is 77. That's why it's taken an entry, because we had a reverse alert on M5 and RSI was extended. So is RSI extended above or below the level? If not, then no, it won't take a trade, will it? So H1M5 strategy is, oh, that's coming down hard. Watch that low, see if we get a double bottom. Yeah, so if you look at days on pound US dollar, for example, so we had a signal short there. We had a signal long there. As you can see, I took that one. We had a signal short there. We had a signal long there. Yeah, but for... I came out there. Yeah, I mean, for 2 days, you will get it. Let's have a look at something that's not moving much, or hasn't been moving much. Aussie, New Zealand, there we go. So you had a signal there, and you had another signal there. Yeah? So it went 1, 2 days where there were no signals. So it is normal, but you should be able to answer that question. If you're trading H1M5 strategy, you shouldn't ask that question, Mumo, should you really? That means you don't understand the strategy. Yeah. Signal was there. Signal was there. So that day, there was no signal because we did not get extended above or below the RSI on the hourly. Therefore, we would not be looking for entries on the lower time frame. Makes sense? Maybe go back and watch the boot camp, or just reread the strategy. Mean reversion. Yeah. Higher time frame. Extension RSI. Lower time, I don't show it in there, but lower time frame, then you drop down. It's better to watch the video, to be honest, in the boot camp. It's fully explained in day 5, all the strategies. So just go and rewatch that video. Oh, what else have I got on there? Something else was in profit. Pan New Zealand. Still dropping. Jacob, quick question about the ORB EA. For some reason, I can't trade the second range breakout. EA just doesn't draw a pending order, although I've got set up on true. Do you know what that might be? No. So basically, take opening range breakout 1 and take opening range breakout 2. Yeah. One thing it could be, and this catches people out, right? These times are entered in the 24-hour clock. I get a lot of people in Telegram. I don't really know how to force this, but a lot of people in Telegram send me a message and their set file, yeah, and their time is set like that. That is not 24-hour clock. 09:45 is 24-hour clock. So just check your range 2 start time and end time have 4 digits. Otherwise, it won't work because it looks for a 24-hour clock time. And if you don't enter a 24-hour clock time, it won't. MT4 doesn't convert it and go, oh, you must mean that. Because it doesn't know if you need 9:25 p.m. or a.m. or whatever, does it? So check that. If that's set to true, then that's it. That's the only 2 settings. If that's set to true and that is set correct, it will draw in. It should do. I mean, there's no other reason it shouldn't. It will. Oh yeah, the only other thing is check your opening ranges. Make sure your opening ranges are set correct. If you're using a 2-digit broker, you might want to, stick a big number on that. Check that as well. I'm 1 digit, so it doesn't really matter, but check that as well. Measure it if you're in doubt. So measure OR3 here. OR3 here is 962. If you're on a 2-digit broker, that would be 9,620. So if you set it to 5,000, your opening range is too big. But it should still draw it in. Just won't trade it. Okay, DAX is failing by the looks of things at the at those highs. So just watching this area to see if we do get any more buying out of it. But it's run out of steam. What's the euro doing? Nothing much. It looks like we've got a strong Swiss franc at the moment. Bit of movement coming on the Swissy. Hey, how's it going? Good, thanks, Wesson. Haven't seen you here for ages. US 30 collapse, you said. Did I? Not collapse. It's coming down, but I'm going to get stopped out on that. What's my risk? 170. 1% is 250. So I'm going to move myself down to 1% risk on this, which is what I wanted to take. I bet I got a trailer set, have I? No. There you go. It's 1% risk. To be honest, I just want this account gone, really, now. I'm fed up with it. I want to concentrate on something else. I might want to start another evaluation. What school did you go to? I'm not telling you that. A school. GU long term. I've done GU already. Short. Andres, maybe I missed that. Did you check Euro Yen? Nope, not yet. We'll check that. Imagine holding GU that long. Yeah, no, I wouldn't hold GU that long. EEJ. So all these yens I'm really struggling with. Really struggling. I really want to get in short on them. However, I'm worried about the size of this propulsion move. We are just testing it now, and we've come straight out of it. But obviously, they sold hard all the way down here. So really, this is one massive propulsion move all the way down to here. So if you think about it, at any point on the way back up, we could find some serious selling action coming in. So I really want to take it, but what I'm worried about is having to scale in like that 5 positions before we actually find some decent sellers. I'm stopped out of the DAX. It's going to be a pain. Oh, no, I'm not actually. Sorry, I moved my stop down to 1%, didn't I? For some reason, it was only 0.5%. So yeah, I don't know with these. It really depends on what happens with these banks. If the banks continue to fail and fall over, then yen is going to continue to strengthen. And the euro didn't get massively good news yesterday from Lagarde. She's up the rates, which is great, which is what we were expecting. But they're now saying they're going to down the rates to 0.25 and stop. That's not what she previously said. She previously said they were going up by 0.5% and they could foresee at least another 2 rates after the March increase. So she's pulled right back. Meaning the terminal rate on the euro now is expected to be 3.75. And this is what I spoke about this morning. With an interest rate that high and an unemployment figure that high, stopping inflation rate that high, stopping your interest rate increases and keeping yourself less attractive is not, I don't think, the right move. But they obviously think it is. So we will see what happens. But yeah, don't know. So euro yen at the moment looks pretty attractive for a short, doesn't it? See if we can get some more buying out of here. So just watch this level here on the DAX. So this was our initial breakout. So this could be just a very deep pullback on a long move, in which case this is a good buy. And obviously sell would go, stop loss would go under there. If this might be collapsing. There's no news come out, is there? NatWest Chairman Howard, we are pretty confident there is no systemic risk. Pretty confident. That sounds like something they would say in billions. How confident are you on this trade? I am not, unsure. Really? Okay. Morning, Zamalek. Did you try True Forex Funds? True Forex Funds. Let me have a quick look. True Forex Funds. Nope. They're futures. Oh, no, they're not. No, they're not. No, haven't tried these. These are the same as E8 though, aren't they? Look at the website. It's all E8. It's the same stuff. It's just a different color scheme. So they're just run by the guys that run E8. Oh, this is what we're looking at with the leaderboard, wasn't it? Of payouts. Oh, well done, Mr. Gambler. Look at Mr. Gambler. 33% return. Yeah. Good luck next month. See the average payouts, yeah? This is what I'm saying, you know. I've just drawn out 4. Yeah, look at off of a 50, right? Look at the average payouts off of a 50k. Yeah, normally people are drawing $1,000 and stuff like that. Even off the 100k accounts, people are drawing small amounts. Yeah, remember my Forex funds have got 37,000 funded traders making 11 million a month out of evaluations. That's all they're paying out of that 11 million. Talked about it yesterday, didn't we? A couple of female traders in there. That's good. From Ukraine as well. Wow, nice one. But yeah, no, I haven't tried them yet. There was a reason why I didn't like them. What was it? Because they're the same as my Forex funds, isn't it? They're the same as my Forex funds. However, they are more expensive. Where's the pricing? Oh, no, not the same price. They're the same price as my Forex funds. Profit target 4%, 8%. Yeah, they were the, what was, I don't know, we looked at them, didn't we? I can't remember why. I can't remember. Yeah, it looks the same as my Forex funds, isn't it? Oh, phase 2 target is 1% more, but yeah, it's 1%. When you're sitting on 4%, though, 1% seems like an absolute mile away, doesn't it? So my Forex funds, I'd rather just stick with a 4. It's easier. Okay, we're bouncing off support. Watch the DAX here. See, again, I would love to add to this here with a really tight stop, but I can't. There's no point in even putting that in. Look, I've got no margin. Literally have no margin. Right, let's get the RSIs done. Borstal. Yeah, no, I didn't go to Borstal. I'm very new to the platform. I do not understand how to interpret the directional bias scorecard, COT and retail numbers for CAD Swiss. It's all explained on there. Look, yeah, explains at the top, and it explains everything here and why it's all important. It's really simple, yeah. Buy, sell. The higher the number, and it goes up to 14. The stronger the signal to go long or short. Don't try and read too much into this. Yeah. If it's green, it's a good buy. If it's red, it's a good sell. Otherwise, your choice. If it's range bound, what I would do is I would concentrate on the retail sentiment. And you've got the combined sentiment here, which will give you good, strong buys and sells. Where are we? Up here. There aren't any at the moment. 5s and 6s. But it explains everything. It's all explained. My website and everything I do is explained to the nth detail. The idea of it is that no one can possibly have a question for me. So I cut down on my customer support. So when someone says, I want to set up the market reversal EA to do this, I send them to the 2.5-hour video that explains in intricate detail every input. But problem is people can't be bothered to read, and I totally get that. It's just I do really try to stop answering the same question over and over again. So it's all on the website. COT explains in detail what the commitment to traders is, how to use it, what it's telling you, links to where it comes from. Yeah, everything's there. But if you still have questions, do let me know. However, please read first. Blow the account for us live. What? I can't though. This is the thing, Jonathan, right? How can I blow it? It won't let me put enough risk on to actually blow the account. If I wanted to go long now, right? If I wanted to remove the, put this down here, that's what I could do. So to blow the account, right? Where are we? 1250. To blow the account, this thing with this trade on has got to do over an ADR. I can't blow it because it won't let me trade it. It's the most frustrating thing I've ever had in my life. I've never traded an account with 1 to 10 leverage. Ever. Ever. It's just nuts. You can't use it. There we go. Buying out the... so if you could possibly get a trade on, there is a good place to get in. Yeah, we've filled the propulsion gap. We've come straight off of support. Lovely tweezer bottoms. John Wick has entered the building with tweezer bottoms. If you go long now, that's your likely result. But possibly you could be depressed. But don't blow your account. I can talk in John Wick's images. It's great. So yeah, either this is going to bounce off support here and we're going to get the trend day, but it's a very deep pullback for a trend day. Stop under the low. Risk. Reward, even if you tap those double tops, is 1.5 to 2. So it's a good entry, whether it works or not. Obviously, it's not up to us, is it? But looks good for a possible entry. My guy's going to start asking for mother's maiden name and for name of first pet. Yeah. Is this because I posted that thing about Greg Secker in the Telegram group this morning? Hey, we've got 142 viewers, guys, with 66 likes. Hit the button, hit the thumbs up, and let's see if we can get that to 150. That is my goal, 150. And if we do get there, someone tell me when we get there, because I'm not watching it that closely. Yeah, Greg Secker. Interesting, isn't it? Yeah, when I keep talking about all these educators and you know, all the adverts we see, Greg runs, obviously, Learn to Trade, which is you know, probably the biggest and best known trading education company in the UK. Very expensive, but obviously it's been going for 20 years. He must be doing something right. He sells software, has got brokerage, etc. The holding company makes £11 million a year. Yeah. So when you see these guys going on their adverts, when they're sitting in front of their Rolls Royces and they're in these beautiful houses and stuff, the trading company earns £11 million a year. Where do you think the Rolls Royce came from? Education. Yeah, it's all education. And I'm sure he's a very good trader. He's an ex-banker. I mean, he's probably a very, very good trader. But if you had a choice of running an education company, never pressing a buy or sell button again and earning 11 million quid, what would you do? I would. You know, I don't knock people for doing it. Just the sell, the video, it makes it look like you can earn a Rolls Royce from trading. You can't. Unless you've got $1 million capital to trade with, you know. So it's interesting looking into it, like looking into companies and how much they earn and how they work and stuff. But anyway, so yeah, is that why you're asking for my my school? I haven't got a trading company and I don't earn £1 million a year. There we go. We're buying. Thanks for the follow, Doran. Sorry, I missed you, Doran. And Jonathan has subscribed. Welcome aboard. So yeah, tweezer bottom, rejection. So basically market structure potentially is that. And obviously buying up to 152.5. See if it works. If you want to, if you put your stop down below the opening range low, Obviously, when we get up into these sorts of areas, you can pull your stop up to virtually break even. Because if we invalidate that low, what we're going to get is a market structure shift back down to the downside. So by the time we're up here, it's either yes or no. So reduce your risk. If I could hit the button, I would. I can hit the button. I just can't get in. I wonder if I could get in with like 0.2. I just can't get anything on. Oh well. Anywho. You plan on entering DAX? I'm in DAX. Yeah. Yeah, I'd love to. Love to. I'm in it. I am in it. Well, actually, I'm not in it now. So I took the ORB 5 minute, which I'm. I haven't got that account open. I probably stopped out on because I have a trailing stop running of 100. Where was the opening range there? So that's ORB1, isn't it? Which is 70. It's 80 pips. So I've got an 90 pip trailer. Oh, 93. Let me work it out properly. My opening range would be, yeah, I'm stopped out. So basically I would have got in here, pushed up. My trailer would have come up 90 and I've got stopped out here. So I've made that much loss. But I have a pending order re-entered there. So I'll be getting back in on the second leg in a minute. You looked at them before I recommended them. All right. Good morning from the USA. What time is it there? It is 9 o'clock in the morning now. Quick question. Once you pass any challenge, are there still drawdown requirements or can you trade according to your own risk management? No, you still have drawdown requirements, exactly the same. So when you, with any evaluation, so I use my Forex funds as my main company. So when you pass, it's exactly the same. The difference is your daily starting drawdown, 2.5 grand, and your overall drawdown, for example, is 6. When you get up to 56,000 here, for example, and beyond, that freezes at 56,000. That is still around because you need to control your daily risk. What they're saying is, don't be an idiot, right? If you've lost 2 grand, walk away, come back tomorrow, you've screwed it. You're not in the zone. If you're not in the zone, don't do it. So that's still there. This, however, freezes. So you can trade an account up. But that's, you don't do that. You don't do that. I don't normally get there. I don't get to 56. If I'm up at 53 or 54, usually I stop trading and I'll withdraw the money. Take it. It's cost me $300 to get that account. Let's say, for example, I got one account. I passed both first time, happy days. It's cost me $300. You know, a lot of people will trade that up to $600, stop and withdraw. You've got to wait, though, a week. But, don't, you know, be stupid, get the money back. You do get that back, obviously. That's refundable. So that you'll get back on your first payment anyway. But make sure you get your first payment. This is where everybody goes wrong. Everybody with prop goes wrong. They do phase 1, happy days. Phase 2, happy days. My God, I've made a fortune. Phase 3, funded account, blow it. They blow it before payday. If you get a good couple of grand in the account, stop, for God's sake, and take the money. Because you have a couple of bad days and you go back to zero. That will make you cross, you'll over leverage and you'll blow it. 80+% of people don't get to payday when they get a funded account. So yeah, these all stay the same. Let's do some analysis. Okay, so that's working out at the moment pretty well, but obviously just watch that as an option. Don't go break even too fast though, because this is a wide market today. Right. Any recommendations for trailing stops? I use a trailing stop of the opening range. So that is the trading stop for me. So I use this setting. Trail as percentage of opening range. So I set that to 110, which is basically what I set my percentage of opening range to use as a stop loss. So I trail at 110 as well. But I will watch. So if we get like yesterday, right, on the Nasdaq, you saw me do it. I did it in here live yesterday on the Nasdaq. So when we got that rally yesterday on the Nas here, so this was your opening range breakout here. Yeah, we flew, we pulled back, we pushed, and as soon as we started doing that, I put a trailing stop manually on it of 30, and we pushed and we pushed and we pushed, and then it took me out here. So I got that, and it carried on a little bit more. But the actual trailing stop that I had on it was something like 60, so I halved my trailing stop. You can get the EA to do that. The EA will do all this automatic. Wrong one. Christ, got so many MT4s open. The EA will do this all automatically for you. So if you set your daily profit target to I don't know, $2,000 or something, for example, just won't do that because it will not trade. You can say with the trailing stop, tighten the trailing stop to a different level. Sorry, one sec. Tighten the trailing stop to a different level when you get to a certain profit target. So here, for example, it will tighten the trailer to 30 pips automatically when it reaches whatever your target is. So it does it automatically. Right. Okay. Morning, Brian. Mr. Original Bushman looking to buy gold. Good luck. Not saying that in a nasty way, but good luck. Hopefully it works. I have no idea where that's going. If we're going to continue to safe haven, it's going up, but we are very extended. So Greg Secker, people still falling for this sucker. I've never done it. I was on the verge when in my younger trading days. I was on the verge. That shows you how long Greg's been around. I've been trading 14 years. He's been around since I started. He was one of the first companies I looked at to learn to trade with. It's too expensive. I wanted to go to London and do his course, but it was too expensive. I couldn't afford it at the time. And then I did a bit more digging, and I found out that the course was just the tip of the iceberg. The course was a couple of thousand. Then you had to buy the software. Then you had to trade with his broker because the software only works with his broker. So actually, you know, you go to a free seminar, which is a day, yeah? In the free seminar, they sell you the full course. At the full course, they sell you the software, and with the software comes the brokerage, yeah? Before you've even taken your first trade, you're $5,000 in the hole. Most people are going to take 10 years to get $5,000 worth of profit. So yeah, yes, he teaches you to trade, and all the strategies he uses are very simple moving averages, price action based strategies. It's all completely free online. I've even got videos which pretty much cover his entire course, which are free on my extra other bit, which is not my main focus. I don't know, I've never done his course, so I can't actually say for sure what's on it, but from what I understand, from what I've seen on reviews and things, there's a lot of moving average strategies, opening range breakout strategies. You know, one of his videos he talks about, doesn't he? I get up, I do my swim, I do my run, and I get to the charts for the open. And then at the open, I spend half an hour making X amount of money. Then I go off and do something else for the day. Yeah. Good for him, because every other trader in the world that I know trades 8 hours a day or more, because you can't make that sort of money at the open and walk away. You can. The opening range breakout does it. Look, did it this morning. Done. But no one is done there, because you've had losses the day before. That's got back 2 days worth of losses. Fantastic. What should we do next to make money? You know, it just doesn't work that way, does it, in real world? Selling the dream. It's the way it always works. It's good. I'm sure the course is very, very, very good. If you don't know what you're doing, obviously, if you've got half a brain, you can go onto YouTube and find information out. You don't need to pay for it, do you? I need it the way gold has been making crazy swings this week. Been beaten up by gold. Right. I will say one thing to you, Mr. Original Bushman. The reason I don't trade gold is very simple. When I pull my P&L out, I see on my P&L, I haven't got a P&L. I can put in a quant analyzer, but if you analyze your trading history, yeah, just pull it out of here, out of wherever, like go in your, in here. Let's pull this one out actually. I'll show you, I'll do it for you live now. Let me just get that out and put that somewhere in my desktop somewhere. Where's the desktop gone? There we go. Done. Whoa, right. So look at this. Look at your trading history, right? And forget this, it's all because it's all negative because the account's just not working. But look at where the maximum losses are on your account, right? For me at the moment on the DAX, right? So what does this tell me? If I stopped trading the DAX, I would have $158 less of profit, which does what? Has a positive impact on my P&L. So go and get your P&L out for the last month, week, year, quarter, whatever you want to do, right? Have a look at it and find out where you are losing the most money. Eliminate that instrument from your portfolio. Never look at it, never touch it again, regardless of what anybody says. You will become a more profitable trader. Yeah, the best way to increase your profitability as a trader is to eliminate the trades, strategies, and instruments that don't make you money. So I did this exact thing with a whole year's worth of position trading accounts, and I made a negative return on gold. So I stopped trading it. Guess what? My next year was my best year ever because I eliminated the thing that didn't make me money. All of a sudden, everything else, look at this, 94, 28, 61, 53, 31. I got a negative there on the US dollar CAD. I got a negative there on the Aussie dollar US dollar and a negative on the DAX. Remove those negatives. What's my P&L looking like? Very happy. But you've got to do this over a period of time, yeah? Because you're going to have good trades, you're going to have bad trades. But over a period of a month or a year, you're going to have a big enough sample set to decide whether or not gold is your instrument. If you're getting killed on gold, stop trading gold. You've got 28 Forex pairs and other instruments you can trade. Get rid of it. It's no use, is it? All it does is lose your money. So stop it and you stop losing money. DAX is bearish, look. At the moment, really hard to tell what the hell is going on with this today. It's not really very conducive to trading, is it? We're basically, all we've done is an A shape. We aren't getting a trend day. What a nightmare. Never mind. Story of my life trying to trade that on my... If I stop trading it on the Fivers account, I'll be all right. I can't take the opening range breakout on the Fivers because this won't let me in. Not enough liquid. Any trades you are expecting today? Yeah, whatever the EA takes for me, basically. Have you ever bought crypto? No, don't do crypto. Nasdaq for me, hate it. Yeah, get rid of it. Don't mind me, Dave. If the Nasdaq is killing you, get rid of the Nasdaq. And the reason the Nasdaq's killing you is because it's the most volatile, violent instrument of all of the indices. So that's why I a lot often will trade the Dow. But I love the Nasdaq because it makes me the money very, very fast. My biggest days are on the Nasdaq. When the Nasdaq wants to go, like yesterday, I just showed you, didn't I? Yesterday, the Nasdaq made me a fortune, $2.5 grand. Pop. I didn't have to do anything. Literally, just went pop. Here's your money. Pop. No reason to get out. Just keep going. I even put a really tight trailer on it, expecting fully. I did it on. It was in the live stream yesterday, wasn't it? I put a tight trailer on it. I said, "This is going to get me out in a minute." It went, "Nope, not getting you out. Nope, not getting you out. Nope, not getting you out. Yeah, all right, you can come out now. No, I'm going to go further." Still holding. So yeah, get rid of it, eliminate it. You'll suddenly make more money. Also, if you hate it as well, you know, I'm falling out of love quite quickly with the DAX, because I'm finding the DAX quite erratic at the moment. And I think it's just because of the way the market conditions are at the moment, with the DAX, that it's either rotational or crazy, and it's, you're getting these big swingy days or tight rotations, and the tight rotations are what kills the opening range breakout EA. And during testing, we were having a lot more of a trend. We've got a 3-week range. We had a lot more trend previously, and I think it's just the market conditions at the moment are just not quite right for it. But you can't tell it. You've just got to trade it all the time, because you can't tell when it's going to work. If you could tell when it's going to work, you would just put it on those days, wouldn't you? So tend to focus on specializing in gold. I need to learn other instruments. Yeah, if you don't, yeah. But this is why I don't specialize. I think we may be waiting for the Euro CPI data. Yeah, we might be. It may be waiting for CPI, yeah. Although it's not red news. So the cash balance was fast. That was lovely. But since then, obviously, we are just returning. So the initial cash balance, yeah. So this is why I use the 15-minute, because that's typically when you would expect the initial cash balance, the initial orders, commercial orders to be placed. And then the speculative starts, and all they've done is literally pull it back to origin, haven't they? So if we sit here now for 45 minutes, we know that's why. And I said, didn't I, on Wednesday, I'm coming to the conclusion that if there is any news event within an hour of the open, it's not a good day for the opening range breakout EA, and it's something that needs to be back tested. So yeah, we need to change. Why is that in bold? Oh, they've changed that. I guess that's because it's the next news event. That didn't used to be like that. Still holding. I tend to focus on specialization. Yeah, so if you specialize, the problem with specialization is, and that's why I don't do it, if you specialize in one instrument and that instrument has a week where it just goes, we're not going to do much this week, and your strategy, let's say you're a trend trader and your strategy is trend trading gold. If gold decides to go into a range for a week, you're dead. Yeah, you can't earn any money. If it decides to do it for a month, you're out of a house. Yeah. If you trade 28 instruments, there is always an opportunity. There's always an opportunity to get into something. Yeah. But you minimize your risk, you reduce your risk, and you trade more instruments. So that way you can build a portfolio, which overall generally is profitable when you can get enough trades on to actually make it work. But this account isn't possible. Who the hell is texting me? Oh, it's my doctor's surgery. Uh-oh. Bloody hell. 2 phone calls and 4 text messages? Really? Mr. Sampson, please come in now. You're going to die. Made an appointment for you 23rd of March. Okay. 1 p.m. Oh, okay. So 23rd of March, I won't be doing a live because I've got the doctors. 23rd of March. When do the clocks change? 1st of April. Okay, yeah, so there's no live room next Thursday afternoon for New York, just to let you know. Not that you're going to remember that. Anyway. Right, let's do some analysis. So RSI, so we've done the ADRs. There is only those 2. So Aussie dollar CAD, obviously that was an M5. That hasn't gone anywhere in London. We're just sideways at the minute. New Zealand dollar CAD, here he is. Useless, retail, charts. This is another guy. Yeah, him and Greg Secker just completely dominate. You'll never succeed using useless retail charts and technical analysis. I, however, have better retail charts and better technical analysis. A child could do it. I've done his course. If you haven't got a degree, you can't do it. you know what? One day I'm expecting Greg Secker and Nirav to turn up on my doorstep. Excuse me. I'll be in trouble. Aussie dollar CAD, yeah. So that's a short. New Zealand dollar CAD, you've got potential short there, but be aware there is upside potential on these a little bit more as well. So may need to get into multiples. ADRs. So we've only got 1 4 hour, which is Aussie dollar Swiss. I'll do some. If any other pairs you want, obviously let me know and I'll do them after this. Aussie dollar Swiss is 4 hour RSI extension to the upside. Sorry. So this is a pullback, V-shaped recovery underway at the moment on the SVB debacle. So that basically is just a V-shaped recovery on that half of it. The first half of it we haven't done yet. So this is a 50% retracement RSI extension. So there's a good chance that we might start to get a drop. We have only just got extended. And the thing that worries me with this is, yes, we've had a reverse alert and it looks like it's potentially starting to come back out of this balance here, out of this range. But I'm worried about it coming back up into this resistance here, which is where the move actually originated from, which is 175 roughly ADR. So again, planning good potential entry here. So if you drop down to M15, you had your reverse alert in Asia and a retest. M5, you had the reverse alert and retest in Asia as well. We are coming down. Market structure looks nice and bearish, so it does look like a good spot. But I would be prepared potentially to get into a couple of other trades on this one. So where we are here, initial entry looks pretty good. But that is potentially where we may head back up into the 2472 zone. We've got this little propulsion gap up there. We've got a bigger propulsion gap here. This is the worrying one. This is what actually started the move off this area here, which is 175 ADR. So if you're getting in here, fine. Every opportunity to get, an ADR out of it, half an ADR, whatever you want to target. And obviously we could see 50% retracement and a drop if it's going to continue to be bearish as it is at the moment. If not, entry there, half an ADR, second entry, half an ADR, third entry. By the time you get there, H4 RSI is going to be massively extended, ready for a profit take, because that move will have just gone parabolic like that. And then we'll get a profit take move off of it like that. So it looks good for shorts. Thanks for the follow, Farzan Karim. Welcome aboard. So if you look at the fundamentals on it, Aussie dollar Swiss, it is completely range bound. It is Aussie dollar Swiss we're talking about, isn't it? Yeah. Completely range bound. There's no fundamental bias on it at all. They are short Aussie, they are short Swiss. And retail at the moment is a -2 because retail is all long Aussie Swiss. Now the retail has been long on the Swiss franc for a long time. So you can see they are still longing the CAD Swiss. They are still longing the Aussie Swiss. Yeah. So they're still longing this thing. Now they were longing it all the way down here as well. So the fact that they are now long and making money means that what will be happening is, now they're happily making money, what they're going to start to do is, as soon as we get some downward movement, they're going to scale out of those longs. They're going to take profit on them and probably flip short, which means there is potential for it to do that sort of movement. Yeah. So it's a tricky one. I like it from here because it's a nice area of balance that we are retesting. So it's an area of price discovery. So price discovery, balance, price discovery, balance, price discovery. We normally stop at the previous balance. And then obviously we either carry on with market structure or we invalidate market structure and come up to the next resistance. So it's this area here where we had a previous support. That's where they got stuck before, thinking, yeah, this is where all the buyers' limit orders were triggering at this level. So what we did, we slammed into it. All the buyers triggered their limits, and then the sellers overpowered them. When we come back to it, the sellers are going to trigger their limits and see whether or not the buyers have got enough strength. So those are your options on it. And obviously, if you're position trading, you're in, you're out, happy. or you're in, out, happy, one or the other. But yeah, just about extended though. It's not massively extended. So, you know, once we get up there, we'll get a profit take move coming off of it. Yeah. But this is potentially, if we're going to continue in the upward movement, obviously, look at the pullback sizes there and extrapolate those. Yeah. And where it's going to go to. So somewhere down into these two lines, look at it on a low time frame. Your entry was there. Your exit would be in that propulsion gap. So target is here. That's Aussie dollar Swiss. That's your only H4. Aussie dollar US dollar is H1, only just extended as well. That's already played out. Missed it. Oh no, sorry, you haven't. It's a big spike up. So the reversal, the structure's just shifted below that low, only just. So that's in right now. There's your gap. There's your target. Straight down there. Nice and easy one. Aussie dollar, US dollar is obviously a short. We've got COT is a little bit less short now. Fundamentals are all short. Sentiment, there's nothing. So yeah, like that. Lovely high. So we're just taking this level out here. We've tapped into propulsion, which they're adding into. That one's tested already. So it's a test of this propulsion. Pull back down into there, potentially push up into there. Obviously see where we go from there. But got this nice area of support resistance up here at 150 ADR. So like that as a short. Aussie US. Yeah, so I'm getting in on this. $66,933. So I've got a support resistance area drawn here, like that. Right. So, and the reason being is because of that. So that is my area here. This is on my funded account. This is what we covered yesterday when I did the support resistance training yesterday. So this is my support resistance area at the moment on Aussie US, right? It's encompassing all of these lows and this whole area there. So this is a support zone. We tested it loads of times. Stuck, we slammed through it. We came back up, we tested it. We tested it. We're retesting it. So what I've got is a breakout entry short here at the moment. Not a reversal alert. So I've got a pending sitting here at 66,925. Actually, it's there. So it's just, you know, there. Yeah, it's encompassing that low there. Yep, so that's my short. And I'm playing it down into there initially, or somewhere down here into this sort of area. So it's a bit tighter. It's a wide range, wide stops. Yeah, so entry, stop, target. 1%. That's all I'm looking for, 1%. I need 4 trades. And this is the thing about prop. And this is why prop is so different to position trading or any other type of trading. In prop, I'm not looking for runners. I'm not looking for big wins. I'm looking to get a 4% gain on my account. 4% gain on my account is $4,000, right? So I want to get into positions with big stops that have got high probability of working and take a small amount of money out of the market. I'm just looking to grab a little bit. Yeah, it'd be lovely to get a runner on it. And, you know, that's $4,000 on its own, isn't it? But in reality, if I can do that 4 times out of a really strong resistance area like that, that's it. That's all you got to do on a $100,000 account. $100,000 account costs you $500. Yeah, 4 trades. That one trade alone, this one trade here, on a 0.5% risk with a 1R, pays for your evaluation. Yeah, this is where you got to look at it. So there you go. That's the hourly version, the hourly view of it, which is what I'm in. So yeah, really like that. because it's extended. Yeah, don't forget the reason I'm in the trade or getting into the trade is because of the RSI extension. And I've looked at it and I've gone, yeah, I like the look of that. It's in a nice resistance area and then drop down to lower time frame. Obviously reversal entry if you want it. I'm just getting a little bit more cautious. Normally I'd take that, no problem. If it's a position trade, I'm in. Euro US dollar. Okay, where is it? There. Hourly extension. So that's the area we looked at for the bounce. And that's the area we are targeting for the upside movement. So University of Michigan this afternoon, we've looked at this already, haven't we? Potentially up into there if we do, lovely, short. It is extended. It's just come out. You've missed it on the M5, M15. You've missed it. You've missed it. However, look at it. Yeah, we're up here. Is there any reason on the earth why they wouldn't come up and just sort that? Potentially come up and sort that, which is exactly what I said on the hourly chart. If we're all the way up here, why aren't we coming up to ADR? We probably will. So it could well pull back from here and we're just not going to finish this off. Yeah, leave that as an orphan. We might do, but don't forget this was caused by the banks. They've bailed out the banks. So there's every chance they're just going to undo this. Yeah. Mary, what does 1R mean? 1R return, reward, whichever way you want to look at it. Yeah. So that's your risk. So you enter there, you put your stop loss there, for example. So that measurement of movement, that is your reward. Oh, that's a really bad, you can't read that. That says reward. I can't draw with a mouse. Yeah, so that we class that as 1R. That would be 2R. That would be 3R. Or it's also people do it like that. 3 to 1. So that would be 3 to 1. 3 reward from 1 risk. If you want to learn about that, I feel like a stuck record. Not a stuck record, but on my website, there is a lot of information. And there is this thing called a risk reward calculator spreadsheet. And on this page, there is a risk reward calculator you can download for Excel, for Microsoft Excel, not for Google. And there's a video which explains in detail how to use the spreadsheet. And it also explains, this is an old one, and it also explains all about risk reward. Yeah. No, it doesn't. It just explains about the spreadsheet and stuff. But anyway, go and watch that. What page was that? Fundamentals. Don't know. That's just the trading page, wasn't it? Okay. ADR pound New Zealand. Pound New Zealand short. Cot short, no retail bias. There we go. Want to be shorting it. Missed it. So up to you if you want to take this as a mean reversion. I'm in short. Reason I'm in short is because that says to go short. So yeah, I'm in short. DAX is I'm still in the DAX. Oh yeah, I forgot. I've set this to below the account, haven't I? This will be interesting, won't it? Let's see. If we get one ADR move to the downside on DAX, it's going to blow. What I need is for every bank in the UK and in Europe to come out and go, hey, we are so stable, even if interest rates go up to 25%, we won't go bankrupt. And then the market will go, really? Okay, we're not in extreme fear, we're in extreme greed. And the stock market flies. And the stock market flies too. What do I need to pass? $1,500, so I need $1,800. Yeah, so that's what I need to happen today. I need a 250 ADR move on the DAX. That's the only way I can see to pass this. I can't get any leverage on. Love it. Anywho, yeah, so that's coming down. Up to you if you want to take this. We're we are at a lovely support. However, it's a short. Yeah, pound is a sell. So tricky. It is an ADR, so there's a good chance you will get a move back up. It's a nice tight reverse alert as well. Let's see if there's any targets to the upside. It's not much, is there? So this area here is where you would initially head up to retest that level, which is the propulsion gap that broke that level. Other than that, you're coming back up here at some point. Don't know when. If you have a look in the past, you'll see how long it can possibly take to get to these. Yeah, big propulsion, big propulsion. 1, 2, 3, 4, 5, 6, 7, 8 days. So envisage that, or potentially that. Don't know. Just draw off the screen then, so you didn't see it. But yeah, not the best mean reversion in the world. That one. New Zealand dollar CAD is another one. That looks lovely. That's beautiful. Gold is going, gold. Oil is going nicely, by the way, if you're on oil. We've just broken the highs. New Zealand CAD. So I'm just seeing if I got that set up on the EA. New Zealand CAD, New Zealand CAD. No, I haven't. Okay. I like the look of this. So obviously we got this drawn on. This is something obviously analyzed yesterday or maybe today. I can't remember. Got that area there to look at. Obviously, from where we are, RSI extension, there's a high probability of a pullback coming in here. However, again, another one of these that we're so close to the propulsion move, which was, that was, I don't know what that one was, but that was some, I think that's probably the CAD interest rate, wasn't it? So yeah, we're so close to that. It doesn't make sense not to come and at least retest that in some form or completely fill it. So although we're here, we've got potential for that, or obviously just go parabolic. If we go parabolic, this is going to be very nicely extended up into those sorts of realms. 2-day push, pull back. So either way, again, same thing, position trading. Don't know what I'm talking about. Go and do the course. It's on the website. It's all free. Getting into it here on a reversal alert. M5, you've had one this morning. We're just sitting around at the moment. This is the ADR. That's why we're looking at this. This is the ADR. I've already analyzed this, haven't I, this morning? It's an ADR. So it's either going to do that, or you're going to need to scale in 2 positions, half an ADR apart, and get out on the drop. Yeah, I've already done it. If you want the full analysis, go and rewatch the video at the beginning. New Zealand dollar Swiss, extended to the upside, coming up into a propulsion gap here. Not a great one, part of a big move. I'd rather have seen a longer accumulation, but it is still what it is. ADR today. So we're nicely extended on the hourly, pushing up into that propulsion gap. There is a possibility of finding some resistance there. That's also a 71.9 retracement on fib. If you put a fib on it, yeah, so there's your 71.9. Do you see what I mean about this stuff? Yeah, when you've been doing it so long, it's all great. All indicators are great and things, but when you've been doing it so long, you know what these things are. You can see them before you put the instrument on there. That propulsion gap is there, and we are pulling back into a 71.9 retracement on fib. Lovely confluence, RSI extension, propulsion gap, pullback, previous area of balance, price discovery failed, sellers win, come back into balance, drop, market structure, short. It all looks lovely for a short. Fundamentals. New Zealand dollar Swiss is range bound. COT is long on it at the moment. Retail is short on it at the moment, which is a long bias. So that's why we've got a completely range bound reading on this. So there's no advantage in either direction. So there's no reason it should suddenly spike or push hard in any one direction at the moment. So I like it as a short, but again, with this, obviously it's very bearish. You can see on the H4, the moving averages, we're below them. We're pulling back into the 24. Nice looking short opportunity. So it's all fully bearish market structure, and we're at a lovely level, but it's not that bit there is, there's no real resistance, is there? So you're looking left, there's no perfect level you can see that has been respected multiple times to the left here. This area is good, but then we just didn't bother with it there much. Yeah, so it's a messy left hand side to look at. So it is extended on the hourly. We're almost extended on the 4 hourly. So if you got into this and you needed additional positions, likelihood is you're going to come back up to there, aren't you? Which is an ADR and a half away. So you're probably going to be in maybe 3, maybe 4 up there. By the time that happens, this is going to be extended, ready for the next leg down. So it could well easily go from there. If not, it's a scaling opportunity down like that. Still looks good, but it's only an hourly extension. Obviously, hourly extensions are weaker than 4 hourly extensions, 15 are weaker than hourly, etc., etc., etc. So looks good, but nice propulsion gap there. So they're going to fill that. We've got all these little ones up here, but I don't really bother with tiny little things like that. So yeah, looks good. Like it as a short, but I would like it more as a shorter ADR. ADR would be the perfect entry on that one this morning or this afternoon, whenever it happens. And last one is New Zealand dollar, US dollar. So that's pulling up beautifully into resistance. So we've got a lovely resistance zone here. 125 ADR. So that area, yes, previous support. Yeah. Pushed up. Then we had a big support zone above that. Pulled down into this level. Chopped about in it for a bit, pushed up, didn't like it, 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 up, didn't like it. That's how you measure the strength of support and resistance. How many times has that been tested? Loads. How strong is it? Very. So good level, 125. So you are extended here on the hourly already, and it is starting obviously to roll over. So again, going back to what I said yesterday in the support resistance, almost want to call it a support resistance bootcamp, wasn't, but you know, the support resistance class that I did yesterday, where the hell is the middle of that? There. Extend half an ADR up and down from that area, because price does not come back to an area, a level, it comes back to a rough area. Yeah, encompasses that. This could be the turning point very easily. And then we're going to come back and test that. So that's going to get tested at some point. We know that because, you know, they always do. Very rare you won't get a propulsion gap fill. So they're going to come back here. We know that. So the question is, are they coming back from here or are they coming back from here? So again, get in. If it doesn't work, take a second, get out. However, this big thing up there, obviously is the ultimate target, but to get back here, this is what I would say, you know, this is what, when we say we see orphaned propulsion gaps, these sort of size, you know, this is a fundamental news event that has shifted the market because this moved so fast, so hard, and we didn't get anywhere near it on the way back. And then the market just went, no, we are definitely shifting. So the bias shifted on the currency there. These ones are the ones that get left behind. We're going to need a massively weak US dollar over the coming weeks to get anywhere near that. However, obviously, we've got the Fed fund rate coming out next Wednesday. If the Fed fund rate comes out as a freeze instead of a 0.25, the US dollar is going to weaken, in which case that does give that the opportunity. So right now, that's a lovely short, possibly back up into there, and then come back and test that. But this lot all needs to have done by Wednesday next week. If you're in this Wednesday next week and you're stuck in drawdown up there, I'd start to get worried, because the Fed could well upset the apple cart next week. But nicely extended on the hourly. If you look at the 4 hourly, we're almost extended there as well. So, you know, we're in here. If it does need to push up back into that propulsion gap, that's where you are going to get your turning point. But hopefully it won't get up there. If you need to get up there, you're looking at 184 pips on a 76 ADR. So it's roughly 2 and a bit ADR. So you're going to be in somewhere in the region of 5 positions by the time you get up there. But then it's going to need to have a breather, isn't it? Unless the Fed come out and say something ridiculous like, oh, actually, we're going to drop the rate. And then obviously all hell's going to break loose. This thing's going to go through the roof. So who knows? We'll have to wait until next week. So there's all your RSIs covered. All the RSIs done. All the ADRs are done. There's opportunities there. Nothing. There's a few good looking ones there. I like that New Zealand dollar, US dollar is the most extended of the lot at the moment. And it is pulling out of that high. So somewhere up here is a really good short. You got 46 pips to the downside, which is over half an ADR. That's easy to do. Do that in 2 candles. So I like that one. Right, let me catch up on the chat. Oh, Euro CPI, 10 minutes. What's going on with the Nasdaq? No, it's failing. Well, it's not failing, is it? We're rejecting. It is bearish. It's so slow, isn't it? Look, taking ages to do that. We're basically back to the open. So reset, start again. One of those days, isn't it, on the NAS, on the DAX? Clocks change. Aussie dollar, US dollar, Euro, US dollar. In bold because its impact on the market. No, it's just in bold because it's the next one. We're talking about this. I think what they're doing, they're just emboldening the next news event. I don't remember seeing that before. That didn't used to be in bold. Whoa. Yeah, that never used to be in bold. How do they set that up? Oh, it's in table rate. Oh my God, they use rows. Wow, that's old. It's really old. I don't know why I'm looking at the code. This is my previous life coming back to haunt me. I spent half my life inspecting code, so it's like, yeah, that's what we used to do in the 90s. Use table rows. Can you see Euro US dollar? I've covered that, haven't I? Have I not covered Euro US dollar? I think I have. We're either coming back up there or we're just filling this gap and we're running. I don't know. It's a really difficult one. Yeah. One of my videos, I talk about, I don't know which one it is, but I talk about good areas to get into trades. Yeah. So whenever you see anything that's like this, which is range bound, yeah, the best places to enter are selling and buying. 80% of the time, the market is in mean reversion. It's in range. 20% of the time, it's trending. So if you're taking a trade from the middle of the range, as always, the odds are 50-50. But when you're taking it from the middle of the range, yeah, there is absolutely nothing to tell you whether that's going up or down from there. When you get to the top of the range, we have some resistance, which is going to have limit orders triggering to help us at least get a push off of it. There is absolutely no reason, there is nothing there that can give you any indication whatsoever of whether this is going to come back and fill that gap or whether it's going to come and retest that low. One of those two things is going to happen. But why take a trade from the middle of the range? There's plenty of things we've just looked at that are extended on RSI at nice resistance levels that are reverting and getting reversal alerts on lower timeframes that you should be getting into. So I don't know. It's just, I mean, you got a nice bearish candle there, but that doesn't mean it's coming down at all, does it? There was a lovely bullish candle there and a lovely bullish candle there. It means nothing. Price action means nothing in the middle of a range. Shooting stars and hammers are only valid if you have pushed and there is a chance that you're at the top or the bottom of a range. Otherwise, shooting stars and hammers like that mean nothing. Yeah, there's a doji there. There's a shooting star there. There's a hammer there next to a shooting star. Yeah. Doji at resistance. Useful. So, don't know. Euro US dollar. Thanks for the follow. NZ Truckee. New Zealand dollar truckee. It's nighttime, isn't it? Nighttime over there. Aussie dollar, US dollar. Somebody else has just said about Aussie dollar, US dollar. Have I not covered that? I've done it, haven't I? I've covered it in the RSIs. Clock's changed 26th of March. Pound yen looks for clean sell-off. Yeah. I like it as a short. I definitely like that as a short. Pound yen. Out of here. I just don't, again, it's very similar to the euro US dollar that I just said about. You are bang middle of two targets. You got this little one down here, and then you've got obviously this whacking one up here. And it really depends what they're going to do with the yen. It's a short fundamentally. It's a short everything. I just want to short everything yen. However, I'm not sure if that is the best place or whether we should be waiting for an ADR hit. That is a beautiful entry because you've got resistance, which is going to trigger limit orders to help you along the way. But right here, it's a gamble, but it's got a possibility of at least getting down to there, isn't it? You're well within ADR, so there's loads of room in both directions, which makes it a difficult entry, doesn't it? Because there's loads of room in both directions. So they've just taken yesterday's high out. So if that is a liquidity run, then yeah, they will run with it. But where will they run to? And is this literally a 50% pullback on a lower leg? Don't know. No one knows. If we knew that, we'd be millionaires. Everyone hit the like button, as David's just said. Did we get to 150? I haven't been watching. We're at 131. I don't know if we've got to 150 or not. I need a little alarm that goes, woohoo, 150. I don't know if that's possible. I might have a look in Stream Deck and see if there's a number of watchers alarm thing. There's loads of stuff in Stream Deck. I haven't touched the surface of it, but I can't be bothered. I don't get time. How about the German index? We've been trading that all morning, Flame. We've been watching it all morning. It's not doing anything, is it? It's just popped up and it's come back to origin. So we're waiting, I think, for the CPI figures in 5 minutes. So let's put our friend on, and we will hear the CPI figures come out. Let me turn him up so we can hear him. I got an Aussie dollar CAD shorts instead. I like the 4-hour wide range bar and the sort of triple top on Aussie dollar CAD. Yeah, it's nice short hourly reversal of that. Yeah, I like that short. Nice zone. Perfect entry now. So if you want to get into this now, pending under the low, you've missed the reverse alert and retest, but good target to the downside there. It's only a little one, but higher time frame, you're looking to come back down here. Looks good. Wanted to take Aussie US also, but don't want to be overexposed. Good man. Trade manager dashboard tells you your exposure. I'm exposed on the New Zealand at the minute. Oh, look at my DAX. Should I bank that? Pound New Zealand. Going to trail it. 360. Trading New Zealand, pound New Zealand. We've hit ADR basically. So I'm just locking in $100 or something here. 100 and probably 100 and 120. So we've hit ADR. So there's a good chance that we might have a little bit of a pullback here. We've done our daily range already. So I'm getting ready just to stick some of that. That gets rid of that this morning, doesn't it? And then hopefully the DAX will pop. Can also bank New Zealand CAD. That's ADR as well, isn't it? I'm going to trail that as well. I'm going to stick a 120 on that. So either I'm going to get runners and then we're going to go off and have a really big day, or I want to get out and put the money in the bank. So that will lock in sort of $200-ish. Just going to put it under that propulsion gap. Come on, where's the other one? God, it's so slow, MT5. Oh, I hate this platform with a passion. Anyway. What's your setting for RSI 14? Yes, it is Barry. Hey, Barry. Hey, Barry. Here's A Barry. Your OLB range 1 starts 15 minutes before market open. How comes? So this is trading what's called the pre-market 15 range. So the whole premise, we are still holding this balance support at the minute pre-market. So there is hope yet. We'll find out in 2 minutes. Is he is on, he's just not saying anything, isn't he? So yeah, the pre-market 15 is 9:45 to 10. So
1 minute now.
What? Are you drunk? Did you hear that? I said 1 minute. I said 1 minute. I'm going to leave you with the I'm not confident he's going to get the right figure out. I think it went out last night. We'll find out. But yeah, so this is the initial cash, what I call the initial cash balance. Well, I don't call it. It's what's called the initial cash balance. So the initial flurry of orders at the open that goes in this first candle. Some people use the first, some people use the first 15 minutes, right? So what this is the pre-market 15-minute range. So before the market opens, we get usually a range for 10 seconds. Let's just hear the euro. We'll see the reaction on here. I say that because that's what I want it to do, but it might do that.
8.5%, 8.5% as expected. The CPI month to month, spot 8%, spot 8% as expected. And core CPI final year on year, 5.6%, 5.6% as expected. All data in line with expectation. Not seeing any move from the euro.
Yeah, no news. So as expected, so just forget that. Yeah, so the pre-market, so the idea of this this trade is that we catch the initial cash balance move, and the obviously the first candle of the open is incredibly powerful most of the time. What we're looking for is just a quick profit. So this is a super fast scalp trade. So the reward on it is 1.5. I haven't got my TP set up, but your rewards on it would usually be something like 150. So all we're looking for is 1.5 hour return on one candle. Yeah, and then obviously whatever you want to do with the others. But so this is a perfect example this morning. So we have our pending orders above the highs and the lows of the pre-market 15. The initial cash balance candle comes out. It's not normally as fast as today. This was a really, really quick one today. So what happened this morning was it pushed down, triggered our short order. Your stop loss is at the opposite side of the range. As it pushes down, what I have on this is a trailing stop, which triggers immediately with the opening range. So my stop loss on this one this morning would have been dragged down to there. So the same distance down, my stop comes down to reduce risk in case we get a whipsaw, which we did. So what would have happened this morning is it pushes back up. It stops me out there with a small loss. So I make that much loss on the short order. It flies through the high, triggers my long. My stop loss is at the low. So now I am long on the DAX. Stop is here. This flies up to here. My stop loss trails up to break even. So that is now no risk. This is a volatile candle. So this first 5 minute opening cash balance is basically, thanks for the follow, Mohammed. So yeah, this first 5 minute candle is the initial cash balance of all of the banks, the big institutions that are what the and thanks for the follow, whoever that was, Frederick, thanks. So yeah, the initial cash balance is all the banks, basically, they get in the mornings, you get to your desk, and on the desk you've got, right, you need to execute this. So this is the commercial desks, right? The commercial desks' jobs are to execute stock sector purchases for their clients, pension funds, institutions, hedge funds, yeah? So they will all have order execution sitting on their desk. This is why this is such a big volatile move, because you've got all the banks, as soon as the market opens, getting the crap out the way, so to speak, yeah? So I've got all these orders I've got to execute. I don't care what price I get, I just need to get them executed, because this guy wants to go long Microsoft with $500,000. So I just basically execute $500,000 worth of longs on Microsoft. Another bank's got someone else that wants to execute $750,000 short on Microsoft. So these guys basically execute their orders. This candle's volatility will be dependent on whether or not all the banks have got fairly similar orders to execute today or not. And you often get like literally a boom, and it's a big bullish candle. And then the next 5 or 10 minutes will often either be a continuation of that or a retracement of that, as you get these initial orders put in, and then someone executes opposite orders while they're waiting for a slightly better price, for example. So, but this first 15 minutes is fast, yeah? And you can see we did all of that range, yeah, in 15 minutes. Since then, what have we done? We've spent over an hour just coming back to where we started. We haven't broken out of that 15-minute range apart from that little breakout there at all. So this is what I call a rotate, well, I don't call it, but this is what's called a rotation day. We're not going anywhere, we're not trending, we're not moving in any direction. So there's no, these players who then, after the initial cash balance, take over, who are the speculative traders, i.e. they are speculating on a long or a short position to make a profit, rather than executing orders because their bosses have told them so. These guys will then take over, and this is what we're looking for. Which way are these guys going? So what we often see is on a trend day, the initial cash balance goes in, we get that 15-minute opening range, which is the blue line, and then we get a trend day from there. The speculators take it off in one direction. But this pre-market 15 is designed to get a quick 1.5 hour return. So worst case scenario, which is often with this, is you get a false move, stopped out for an amount, long, profit. So you get a 1.5 hour return, and then you take off whatever your loss was. The best days, which we have as well on a regular basis, and these are the days you clean up, are you get in, or rather you're inside here somewhere, so it opens, that doesn't happen, and the thing just goes crazy out the top. So you make that 1.5 hour return, and then you catch a runner. Those days you're making 3 to 5K on a 100K account. 3 to 5%. So that's the purpose of the pre-market. It's more dangerous because you can get that, and then a weak move, and it does that. Yeah. So if there's no orders to execute, or a very low volume of orders to execute in the initial cash balance, then what you get is a whippy day. And in those cases, you lose both trades. But you can't control that. Yeah. And, you know, there is no control in the market. The market does what the market wants to do. You have to execute a strategy that has a long-term edge. This has a long-term edge. But days like this, you'll find very difficult to make money. But you know, you can trade the pre-market only and then stop. You could trade the 5-minute opening range, which is that. And a lot of people will use that as their breakout. Yeah, in either direction. Or the 15-minute, which is kind of the safer one. But the 15-minute is always going to be a wider range. So you run the risk of this. So the 15-minute is kind of your long term. In a 15-minute opening range breakout, if you're using that setting, you'll find that you'll be still in a trade at the New York Open. Yeah. And that trade could be within the range. It could be a breakout of the range. It could be just about where you started. And then it's your choice at the New York Open. Do you close it and then trade the New York Open and do exactly the same thing again with the Nasdaq or the Dow, or the S&P if you wanted to, but the Nasdaq and the Dow are the primary ones you'd want to trade because they're more volatile. Or you don't. It's entirely up to you, because this will also, the DAX will also move in the US session. It gets dragged along with the other indices. So the whole purpose of having those three settings is you can trade all three if you want to, or you just trade one and you can set them to true or false. It's entirely up to you. And you can also have what's called continuous mode. So if the 5-minute opening range, for example, is there, if we break out and you've got a trailing stop, for example, and you got stopped out here, what the continuous mode will do when you get stopped out is it will replace the order. Because obviously what happens a lot of the time is with market structure, you get a pullback and then you get a continuation. If that happens, we want to get back in. The continuous mode will mean that it will get you in again. So if you did true there and true there, what it will do is it will trade the pre-market breakout for you. And if you got a pre-market break that went like that, profited, closed the position, and then it did this and pushed back inside, it would replace that pre-market. And what that would be is a retest of support and get in again. Yeah. Makes sense? So that's what the opening range breakout does, and that's what the pre-market is for. The pre-market is a riskier strategy, but you know, some days, I mean, look, go back and look at this DAX move. Yeah, I mean, the day that we had the this, yeah. So 10 o'clock is your open. There, right? So your pre-market is here. So on that day, on this particular day, what you got was a break to the downside and push down. So you would have trailed your stop down and made a small loss. You broke to the upside, it failed, came back down, you'd make another small loss. So on that day, if you weren't using continuous mode on the EA, you had 2 stop outs, which probably would have equated to 1 risk because the trading stops would have minimized your risk. If you'd have had it set to get you back in again, my God, did you bank? On that day, however, if you had just taken the 5-minute opening range, which I can't see what it is, just taken the 5-minute opening range candle, yeah, what you would have had is potentially a short trigger, depending what your offset is, because you offset your orders ever so slightly. So maybe you triggered short and stopped out, then you triggered long and stopped out, then you triggered short and killed it. If you'd have taken the 15-minute opening range breakout, it's there. Yeah, 1, 2, 3, 15. You would have triggered long, stopped out, and killed it. So every day is different, and there is no one setting that will work every day. If you knew which setting you needed every day, you'd obviously kill it. And you can change your settings depending on what you think. But if you leave the settings as they are and run them in the backtester, if you just use the 5, you'll be profitable. If you just use the 15, you're profitable. If you just use the pre, you'll be profitable. But you won't be profitable every day. But overall, these days are going to absolutely milk it. And you'll get these once or twice a week. Not to this extent. This was a big one. A really big one today, wasn't it? On that day. But look at the Nasdaq, yeah? I mean, yesterday's Nasdaq. There's your break. So 130 is your open. There. $14.30, is that still right? Yeah, anyway, there's your open, somewhere around there. No, your open's earlier, isn't it? Of course it is, it's 13.30. There's your open. There, yeah. This, I was on the, you know, if you were in the live room yesterday afternoon, I was on this all afternoon and I got out up here. Yeah, beautiful. 2.5 grand. These 2.5 grands make up for all the little choppy ones that you get, but you just got to wait for them. You've got to be patient with the strategy, but the strategy works very, very, very well. But there is no right or wrong. You know, you pick what you want with it. but it's a great little strategy, and I've used it years. I got taught it in stock trading when I first started trading as a stock trader. I got taught this strategy, and it's basically the way. It's basically you're manipulating the opening cash balance, and you're manipulating the first speculative run of the day, and you get on with the buyers. If the buyers are going to go today, you get on with them on board, and you get off at some point. You never know when or what, but you don't know if they're going to go or not. There is no way of predicting the future. But you know, you can see these cycles, these patterns unfold every single day at the same time every day, which is why the ORB works. We know it's coming, so you can predict it. There's no other movement in any market in the world you can predict apart from the index open, the bell that rings in New York every day at the same time, and in Frankfurt at 8 a.m. every day. The bell rings, it opens, it goes. Yeah. So it's a beautiful strategy in the fact that we know something's going to happen. We never, ever know what. But we can build a strategy with a risk profile that takes advantage of it. Yeah. But it's all explained. If you want to know it in any more detail, it's all explained on the website on the strategies ORB. So the mechanics in the video, which is 2 hours long, so you can either listen to me waffle on for 2 hours or you can read the page. But it explains the theory behind it and the variations of the strategy you can use. It doesn't explain the pre-market 15 in here, actually, because I mean, it's more volatile and dangerous, so I don't cover it in there. But, you know, go and read. Oil is working nicely. Anybody that's in oil? So we're out of the lows. So again, for the ORB strategy, if you've taken the 5-minute opening range, yeah, you've had one long stop out at some point in here, and then you are now short. If you took the 15-minute opening range, you had one move which you've stopped out on, and you are now short. So, you know, this is why the 5 and the 15 are lower risk, because you've only taken 2 trades maximum today. You've had one loser, you're now in another one. And if this now collapses out the lows, in fact, we need to look at where this is potentially going, don't we? But oil, by the way, yeah, so if you're in oil, we've broken that high. Not very convincingly, unfortunately, yesterday's high. We maybe stop running it. But not far to go to T1 anyway. So on the DAX, whoops, that's the Dow. Whoops, no, that is the DAX. So the DAX downside, we've got, that's the rejection that we looked at this morning, which is what's working now. So to the downside, we've got that high, which is 140, call it 150 basically, isn't it? It's a round number. Oh, no, sorry. Oh, God. To put a line at 150, that's going to be miles away. Yeah, so that's your first potential support to the downside. Failing that, I would say close to ADR, 149. So those are your levels to the downside to watch. There or ADR. Tricky, there's lots of crap on the way, isn't there? There's not a very nice price action really on the way. So that or that area. Yeah, 149, well, I still call it 149. 149,000 or 150,000. There you go. Oil, yeah, it's going. How do you hide bid ask on the pairs panel? How do you hide bid ask on the pairs panel? You mean this? Untick auto arrange. Yeah, if you have auto arrange on, you can't do this. Untick, right click, untick, make it wide. There you go. Aussie dollar, US dollar, similar to New Zealand dollar, US dollar. Yeah, so they're the same thing. They're not the same thing, obviously, but if you're going to trade basically what you're doing when you're trading Aussie US and you're trading New Zealand US, you're trading Asia against New York. Yeah. So the Asian session and the New York session. So Aussie moves in obviously the Asian session, it's in the Australasian area, New York, and so does New Zealand. And the US dollar moves during London and New York. So US dollar gets 2 sessions a day. Asia only gets 1 session a day. So if you're trading Aussie US, if you look at this pair, they are often in sync. At the moment, they're probably a little bit out because the fundamentals are a little different. But if you look at them, you'll find they tend to move at the same time. It's New Zealand dollar, US dollar. There it is. So you'll find you get very similar sort of price action on them at the same time. They're a little bit out at the moment. Bearish. Yeah, so the profiles will be slightly different. But if we're going to get a pump on the US, they will both come down at the same time. They've got slightly different fundamentals in export. So there's a lot of coal and stuff out of Australia, and Aussie is sheep, cattle. So they will be affected by different things. The Australian dollar is affected mainly by China because the vast majority of their exports go to China. Whereas New Zealand, their exports go worldwide. So when China has problems, that affects the Aussie more than the New Zealand. So that's why we get out of sync, and that's why we're a little out of sync at the moment because of the China lockdown. And Australia's been strangled by that, which is why it's been so weak. But yeah, if you're going to take one, you know, you'll always find this. If you have your portfolio exposed to Aussie US and New Zealand US at the same time, I've got New Zealand CAD and Aussie US, which are very similar. But if you find yourself exposed to both of those at the same time, you'll find you'll go into drawdown on both. John trades sheep. Yeah. Friday price action. Yeah, it's a bit near today, isn't it? So yeah, let's see if we can blow this, shall we? DAX. Let's go DAX. Blow my account. If I could possibly add to you, I would. Just for fun. We've had a reverse alert on the 5-minute. Structure is short. Smash da like, people, as Zamalek has just said. Germany 30 could be a tweezer again. No, it's not. It's Dune. It's going Dune. Yeah, I mean, I've got a big old stop on this. So I'll probably be holding this on Monday. I'll see if I can bank, you know, if this pulls back up into here today, then I might just take a small loss on it. But I literally am losing the will to live with this. It's the most horrible funded account I've ever traded. It is ludicrously difficult to get any trades on. I literally am locked out. I can't trade because of the margin. It's just terrible. $42 of free margin. So I think with this, you know, like I said, if you're going to trade fivers, you need to swing FX. You just can't get any size on this, and this is what I do with my funded accounts. I have lots of futures going, and I scalp. So can't really do much with it, and I really can't be bothered to trade. It's a stop loss as well. I hate being forced to use a stop loss, but I'm forced to do with it. So I don't have a stop loss. They close the position and I get a strike. It's not a good design for scalping. Well, it's not designed for, well, I suppose, yeah. I mean, it depends how you look at it, doesn't it? But if you're scalping with single positions, you'll be fine. But I don't scalp with single positions. I get in with 0.5% and I add. Or I get in with 1% if I'm feeling aggressive and I add. I can't add. If I can't add, I can't. I mean, it just doesn't work for me. So I don't know. I'm going to stick to my Forex funds. I just like the idea of it because it's really cheap. It's 95 euros for 100k, which is dirt cheap. 30 deals done dirt cheap. You got to buy them. Does your EA execute trades on positively correlated currencies at the same time? No, I don't have any EA that does anything to do with positively correlated currencies at all, no. The EA will execute trades on whatever instruments you put it on. So if you put it on every instrument, it'll execute on every instrument. Market reverse alerts will anyway. H1 hedging, 5% this week, H1 hedging. Sitting in 2.5 DD, only 3 positions with multis on. I'm liking the H1 hedge set file at the moment. I shall run this for a couple of weeks as a forward test on every pair, just to get an idea of max DDs. But yeah, liking it so far. Look, thank you very much. There you go, passed, prop firm pass. Ta-da! H1 hedging set file. So take the M5 hedging set file for the market reverse alerts EA and instead stick it on the hourly chart. Stick it on every pair. You have passed evaluation this week on a 50k account. Well, when you get rid of that drawdown you have. So you got 645 excess at the moment. So you can knock 645 off of that. But yeah, stop it taking new trades and just DD control these down to 0 and pop. Bang, you're done. Good, eh? Sentiment EA, not so good. This isn't working. I need to rethink this sentiment EA, unfortunately. Theory's good. Execution's wrong. It's executing wrong. It's not set up right. I've got to do another test on it. But as I say, I've had no time because I've been streaming literally 24/7. So I need to spend some time, get the data out and do some analysis on it. St. Patty's Day on Financial Juice. Is it? St. Patrick's Day? Today? Oh, him. Was it St. Patrick's Day yesterday, was it? I don't know. I don't pay any attention to those things. Yeah, so he's probably drunk. He did sound... He sounds a bit... I don't know if it's my stream, his stream breaking up or his voice breaking up, but something's not right, is it? We just had some news come in. Euribor rate rises, biggest jump since 2001 for the euro.
5 minutes away now from the Russian interest rate decision. Forecast for no change. Price 7.5%.
He is drunk. He said 5 minutes away from the Russian interest rate position. I think he meant to say interest rate position, but it came out as interest rate position. He's drunk. That's funny. Normally, there's a girl when he's off. There's a girl that does it. The Russian interest rate position. That'll be interesting. Bad. Morgan Stanley sees the ECB delivering 25 basis point rate hike in May by previous 50. So yeah, we know it sounds like we are hitting terminal rate on the euro. So having a little bit of a drop on the euro on that IBOR rate. Shorts on euro. Oil hasn't made any progress yet. Still sitting at the highs. Would you try the ORB on Forex? No, you can't use it on Forex, Tony, because there is no open in Forex. Forex trades 24/5. There is no open. Yeah. If you look at an FX pair, sometimes it goes like this yellow box is roughly the London Open. It's not exact. There is no such thing as the London Open because there's no execution of orders at a specific time. So, you know, that was a sell-off, obviously, that started. But, you know, the move started in Asia there. That day, it didn't start until an hour and a half into the London session. That day was obviously craziness. That day, you know, it took an hour for us to get any kind of traction. But, you know, the difference is there is no bolt out of the blue in Forex. The market will move when the market moves. So what I was saying with this, at 8 a.m., the market opens. There are orders queued ready to pile in at the opening bell because they want to get them out of the way and they want to get the orders executed to start the speculative moves. On an FX pair, it's more like the London trader rocks up at 7:30 in the morning. He's got his coffee and he's got his croissant. He sits down at his desk. He reads the paper for a bit. He gets the Asian figures passed over to him to see what the book's like. He looks at it, looks at what he's got to execute, and he goes, yeah, right, okay. Well, let's buy some of that. And he presses a button. And he'll execute his orders slowly. Yeah. There's no, right, I've got to get all this crap off my desk. It doesn't happen that way, which is why you never see this Forex market at the same time every day, 8 a.m. UK time. It flies. It doesn't work. Doesn't do it. Any FX pairs. Yeah, look at this. Nothing. Yeah. The candlesticks are not any different. Every now and again you get one, but they're not any different at the open, really, much to Asia. You get a little bit more movement, but you never know where the Asian and the London session overlaps. There's no time. So it just doesn't work. You could use it in the fact that you could set up the ORB EA to trade the London breakout strategy. Yeah, so the London breakout strategy is very simple. It's the Asian high and low.
1 minute to go now to the Russian rate decision.
1 minute to go to the Russian rate decision. We're going to get the Russian rates down in a minute. So you could set it to do the ORB on that. So you would set the times on the ORB EA to starting at 0001 and go through to whatever you want your range end to be on your broker for when you think Asia ends, and take that range and take that break. Yeah, so you could use it for that, no problem at all. It's literally all the ORB EA is, the opening range breakout EA is, it's a breakout EA. So in theory, you can use it for anything. You just have to, it just breaks out set on time. So you have to set a time limit. So yeah, you could use it for anything. But I don't know. I haven't tested it basically. So
no change, rate remains unchanged as expected for Russia.
7.5. Their interest rates are 7.5%.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flowing futures.
I've turned you off. Shut up. Yeah, 7.5%. Don't want to earn a mortgage, do you, in Russia at the moment? So yeah, the answer is yes, you could use it, but I haven't tested it. Hello, sir. I'm not a sir. Good afternoon from Indonesia. Hello. Designs for scalping today in the US, is it? Right, Guinness Day. Yeah, Guinness Day. I like Guinness Day. I like Guinness. Sunday, pub lunch, Guinness. Rite of passage. Thanks for all the information and always answering questions. Yeah, cool. 119 in here. That's not good. We didn't get to 150 again. We hit 140 something, I saw, but we didn't quite track it again, did we? Close. Every day we're so close to 150. Never quite get there. Is it a sell in Euro US dollar? I don't know. Euro US dollar is bang in the middle of a range at the minute. So very difficult place to take trades from. Yeah. If you were going to trade, you want to trade from there or you want to trade from there. You don't want to trade from there because the odds of that trade working, well, the odds are always 50-50, but it's difficult to know whether we're going to challenge the highs or the lows. So depends what way you look at it. We've got a high and a low, and both of them are higher highs and lower lows. So that is an outside bar. Look at it on the daily. We put in an outside bar. I turned you off.
Of 82 economists, but
I turned him off. Shut up. Yes, you got an outside bar, and that outside bar is an outside bar pretty much on the month, going back to middle of February. So, you know, no one on the planet can tell you where this is going at the moment at all. What's happening with the banks? That's what's going to make a difference. What's happening with the banks? Thanks for the follow, Harshad. However, obviously, it's a big, strong push down, and it's a 50% retracement. So yes, there is potential for that. That's going to require a strong US dollar. The euro, I think, may well start to weaken from here because Lagarde has not so much backtracked on her previous forecasts, but she said that they're going to have a 0.25 increase on interest rates moving forward. We were expecting a 0.5 and we were expecting another 2 rate rises. Now what we've got is 1 rate rise at 0.25%. So that is a lot worse than we were previously expecting. So that would potentially weaken the euro moving forward. So the US dollar rates are going up by 0.25 next Wednesday, as has just literally come through. Perfect timing. Fed is raising rates at 0.25 in March. Said 76 of 82 economists. 5 says a pause, 1 says a cut. They're wrong. So we're going up by 0.25%. So that is bullish US. And from what Lagarde's just said, I would say that is bearish euro. So yes. But is it that or that? Don't know. So if you trade the way that I trade, what you'll be doing is waiting for an RSI extension on the hourly, dropping down to M5, taking the reversal alert or the retest, whichever you want, and going short. If price pushes up, adding a second position at ADR in that propulsion gap. And if it continues to test the highs, take a third position there. By the time you get there, you'll be massively extended on the hourly. You'll be extended on the 4 hourly probably. And then you just wait for the pullback move on that to take a profit. So 1, 2, 3, out. Yeah. In, out. Wouldn't take that. So in, out, or in and out, or whatever you want. But yeah, you get the point. Yeah, position trade. Don't use a stop loss, and you won't get stopped out. Bootcamp. Durpen. Yarp. Derp. Morning. Is it sell? Yeah, Nasdaq sell. I don't know indices. I really don't know indices. Nasdaq, you shouldn't be trading the Nasdaq in the morning. You should be trading the Nasdaq in the afternoon. Yeah, Nasdaq is a US instrument. You trade it in the US session. All you're doing at the moment is you're trading Globex. You're trading algorithmic movement. Yeah. You want to wait for the open, New York Open. This isn't going to go anywhere this morning. And if you're asking if I know which way it's going today, no one knows which way it's going today. What happened yesterday has nothing to do with today. The orders placed today are completely separate from the orders placed yesterday. However, we are on a 4-day rally. So you would have to say that we are due a pullback, aren't we? 1, 2, 3. Well, we're not really on a 4-day rally. We're on a 3-day rally, but obviously today. So target is within ADR today on the Nasdaq to the upside. So if we're going to retest the highs and find limit orders up here, that is ADR. So easily we could get to ADR. If we get to ADR, that's a lovely sell. I'd sell it out of ADR today. But quite possibly we're going to pull back before we get up there because it hasn't got enough strength to get there because we're on a 3-day rally. Yeah. 3-day rally, drop. 3-day rally, drop. 3-day rally, drop. 3-day rally, drop. What happens after a 3-day rally? Quite often it drops. But see what happens. At the open, so 1:30 this afternoon UK time, I will be here and we will see what happens because I will be trading the Nasdaq. Oil is still hovering. I keep looking at my P&L. It's sitting in $500 and it's not moving. Not getting anywhere at the minute. So we're really struggling at yesterday's high. We are bullish, but there's not really any liquidity in here at the minute. So not far to go, but not really filling me with confidence at the moment, I have to say. It is a new high though. Just have some volatility coming on the DAX. DAX is getting a bit jittery. Mr. Wick has entered the building. Look. Oh, wrong one. So that's a reversal candle. That's a 3-bar reversal. Push, pause. Sorry, pull, pause, push. But we're being met by John Wick. So tricky. I'm not going to bother with that anymore this morning. It's very difficult to tell which way that's going. It's not going anywhere at the moment, is it? So going to leave it there. Right. So that's all for this morning. ADRs are all good. New Zealand dollar CAD, lovely short opportunity. Aussie dollar CAD, again, lovely short opportunity. That's already playing out. Your 5-minute reversal that was up there, and it's starting to go now by the looks of things. Pound New Zealand, I am already short. I'm out now. Must be short. Must be out. Not quite. No, I'm still in it. I'm still in the Aussie Pound New Zealand, but I prefer that as a short than a long. So there is an opportunity for it to come. Well, it is going to come back up and retest this level at some point, but it's whether or not it's going to do that before it does that, or whether it's going to do that and come back up there next week. So difficult one, this one, but it is an ADR reversal, M5, but not great from a fundamental perspective. Where's my buyer scorecard gone? So Pound New Zealand is a short from a COT perspective. So it is counter trend, but obviously at the moment it's just range bound. But it is also a very, very good range bound buy. So looking at the zone, if you like, on this Pound New Zealand. So there's your lows from there, and there's your highs there. So this zone here is a perfect support resistance area, and we're bang in it at ADR with an RSI extension. So absolutely beautiful. But I just can't bring myself to long this thing because the economics of the pound are so bad. So if you're going to long it, don't get greedy. Look for a quarter of an ADR, 39 pips, half an ADR, 78 pips maximum. Just don't get greedy on it if you're going to take it, because look at it. You're kind of running into a brick wall at the minute. Mr. Wick today in the German TV part 3. Yes. John Wick part 5. I'm long Nasdaq today. Open interest is up. Yeah. The only reason open interest is up is because we're on a 3-day rally, though, Chirag. So just bear that in mind. Yeah. Open interest will be long. Why? Because they've been opening longs. But day-to-day open interest isn't something I really pay much attention to. I pay attention to the longer term on it, but yeah, I think it's going to come and test the highs, definitely. But I don't know whether it's going to do it today. We'll find out this afternoon. It'll do one or the other, won't it? Aussie US and New Zealand US market reversal H1M5 jazz box. Yeah. Yeah, both of those we've looked at today. They're hourly RSI extensions, or they were, they've gone now. So that's because they're playing out. Aussie US, H1, whoops. H1 was extended, reversal alert, M5 reversal alert. You're in, you're short. Thanks for the follow, Andrew. Oh, and Harshad, did I say your name? Sorry, I missed you. I was waffling. So yeah, Aussie US, perfect. Reversal alert short, hourly extension. That's your target initially. And the New Zealand one, H1 extension, reversal alert at resistance. Oh, you're just getting the reversal alert on that one. But again, it's the same thing. So like I said earlier, take one or the other, not both. Because all you're going to do is if the US dollar weakens, you're going to double expose yourself. So one or the other. Take both if you want to. Obviously, just bear in mind you're over leveraging. So maybe move one of them to a little bit of a break even or something. Took New Zealand dollar Swiss short. Am I safe? You're never safe. This is the markets. You're never safe. It's like The Walking Dead. At any moment, yeah, one of them is going to come in and bite you. You're short. Yeah, so that's an H1 M5 reversal. No, you're not safe at the moment because it's just doing that. When you break that low and start moving down, I would say then you're safe. You're never really safe. The reason you're not safe is because of this. Like I said earlier, that's probably, we're either going to do that and that. So we're going to do that and that, or we're going to do that and that, or we're going to do that and that. I don't know which, but that's what you've got to plan for. That's what position trading is all about. When you get in, you have no control over which way it's going to go. The market will go where the market's going to go. So your job is to plan your trade. So when you get in here, it's either going to go down and it's going to hit your target, or you're going to get greedy and go for a big one, which is no problem. It's fine. Go for it. And you're going to hit your target. Or you're going to get in and the market is going to continue in that direction, in which case it's then going to look at ADR and a propulsion area to find sellers. So you take a second position and you get out on the drop. I don't know which is going to happen. I don't know if you're safe. No one does, because we don't control this. It goes up and down on its own. So there's no way of knowing where it's going. You just get in, get out. Go and watch the Bootcamp if you haven't. It explains everything. Just go and spend 3 days on the website. It would just tell you everything you need to know. Right, I'm going to leave it there. I'm back on at 1:20 for the New York session this afternoon. We'll obviously trade the Nasdaq and the Dow and just watch that. We are not making any progress on the DAX at the minute, but it is potentially just a flag drop. So we might do. So yeah, I'll be back at 1:20. We'll obviously have a look at what's happened in the markets this afternoon. From the RSIs, at the minute, there's not a lot of movement going on, as you can see. We've only got a couple of ADRs, so it's a quiet day. We've got no news. We've only got the University of Michigan this afternoon, which isn't likely to do a lot, and that is half an hour after market open. So we'll see what happens this afternoon, but it might be a fairly short session this afternoon because I get the feeling it might be a bit of a quiet one. We've had so much excitement this week. I think they're probably just done and going down to the pub, which I wouldn't blame them. So I will do the same. So we'll see how it goes. 1:20. Come on, we'll do the New York session. Otherwise, if you can't make the New York session this afternoon, I'll be back at 7:50 in the usual time Monday morning for Frankfurt and London. Yeah, and we'll see how we get on. So I will see you this afternoon, hopefully. If not, I will see you on Monday. Hopefully it's profitable. Have a good one.